All right, guys, we are here. This is the second debate in our debate series. We had Alex Gladstein and Aleks Svetski earlier in the week, and now we've got Bitboy Crypto and Alex Gladstein debating the merits of the distinct asset classes Bitcoin and other cryptocurrencies.
You do
So
realize
very
my name's not
excited.
Alex Svetski.
I called you Alex Gladstein? This is Alex Svetski. This is Alex Svetski. I'm sorry. There's too much stimulation for me. I'm on Spaces. I'm on YouTube. We're all over the place right now. My bad.
Svetsky, don't forget, he's the one on your side.
Yeah, I'm
right.
on your team, dude. Don't
It's
just friendly fire on me. My bad. So we've got outside of this, we also have an episode of FedWatch, and we've got Nolan Bowerlight doing the breakup. So stick around after. We're gonna be giving away a lot of Bitcoin during the show. I'm pretty excited, guys. Okay, well, without further ado, I mean, let's get started. I want to start on that, which I think we agree, but maybe we don't. Bitcoin and crypto are different asset classes. Do you guys want to talk about that and some of the differences you see between them?
Not really. I actually wanted to ask Bitboy, I think that's your name. Like what do you do? Because I don't know anything about you actually, but like do you run like a channel or something, or do you teach people to trade, or what's the deal?
I think so. I think that's what I do. I think I have a YouTube channel. It's one of the.
You think
it's got to be one of the biggest 21, like one of the 20 biggest ones out there, I think, in crypto. I don't know. I'm the first with 1 million subscribers, I think. I don't know. So very irrelevant to the world of crypto. I'm sure that everybody who's in the chat here, I'm sure you got a record number of people listening and watching because they're really interested on, your opinion on things. But I'm just a little guy in crypto and just here to, make a case that, there's some altcoins out there that have some use.
Okay. So out of curiosity then, so you run a channel, what's the main premise of the channel? Is it like, are you trying to, like, what are you teaching people?
Yeah. So our mission statement here at Bitboy Crypto is to empower people to find financial freedom through crypto assets. So I think that pretty much, wraps it up. We education, focusing on really fundamental analysis on what happens on the daily. We bring in some people to talk charts. Charts and technical analysis are not my strong suit. It's not something I'm particularly interested in. They don't, hold my attention for extremely long periods of time. But understand, like, for instance, we talked a lot today about the Fed meeting and how, the effect of what's going to occur from this. Are we going to see a reversal from the Fed's position on things and how that relates to the price of Bitcoin? How right now we're kind of at a pivotal point for this bull run in Bitcoin. If we are still in a bull run, if we go below 30K, certainly can be argued that we're not. And, we've got a lot of macro factors going on, with the stock market and the NASDAQ crashing and, the Fed comments, Ukraine, Russian crypto ban, the whole thing. So we really focus on those and, how those have to do with the overall narrative of Bitcoin, the price of Bitcoin. And of course, we get into, different coin reviews. We talk about different projects and, what their value proposition is, why we think they might be successful or not successful. So really lately, we've been really focusing on just, a lot of the fundamental stuff going on in crypto.
Okay. So then, psychologically speaking, why do you do what you do? Like, is this how long you've been doing it for? Like, why'd you choose this for a profession?
Yeah, so I chose this for profession. I go back to 2012 when I bought my first Bitcoin, $12. I bought $400 worth of Bitcoin at that point. And, that amount, today is worth a lot more. 2017, I always watch crypto, watch what's going on with Bitcoin. In 2017, I really looked at the prices of crypto and really felt a lot of regret for not understanding Bitcoin, not understanding crypto. And that's really what drove me to create this channel was, there were not educational resources really available in 2012. I think if you go back, maybe Crystal Rhodes and Bitcoin Uncensored might've been the only, YouTube channel that was out there. There wasn't a lot of information. You certainly couldn't find any information on CNBC or any mainstream outlets about crypto and about Bitcoin. Back then it was all Bitcoin. There wasn't really even, maybe a mention of Litecoin or Feathercoin or some of that stuff. But I think for me, the lack of education resources, what really drove me to want to be a person that, provided education to people about what crypto is.
So why does that drive you though? Like, so why turn that into a YouTube channel?
So I've always been a person who, it has been driven to help other people. So it's a little bit about my background. If you go back to 2007, I overdosed on drugs. I was heavily on drugs. I was a meth addict for 7 years, and I went through a really hard time. I overdosed. I almost died. I was in a coma for 3.5 days. I came out of that coma, and I woke up and I was in a hospital bed, had a breathing tube down my throat, and I've been struggling my whole life. And I remember being in that hospital bed and looking out that window, and I had two thoughts. The first thought is the light entered my eyes, was like, thank you, God, for saving me. Like, I should be dead right now. I knew I should be dead. And the second thing was, I wanted to change my life. So I went through this really long, process of trying to change my life. And I went through rehab for 2 years. I was there for 20 months, 10 months at a place called No Longer Bound in Cumming, Georgia. Went 10 months through drug recovery, another 10 months as an intern. And I really decided I was going to dedicate my life to helping other people. And so that's what I did. Over the next 10 years, I would work, go from, working at a recovery center to being the executive director of a drug rehab program for teenage boys, trying to help people change their lives. And something happened in 2018 for me, which was I had started this channel in January of 2018. And, as we moved towards the middle of that year, it's like my passion changed. My passion changed from, this place where I had been, where I spent the center focus of my life was getting off drugs and was helping other people to do that, to where my passion changed to crypto. But it was still that same thing of wanting to help other people. I wanted to help other people not be in a place where I was, which was a place where I was totally, like, I saw crypto and it was in front of me, but I had no idea of the life-changing power that crypto had. And so I want to implore other people to look into the future, to know what is coming, to understand what is coming with crypto. And now you fast forward years later, we were 100% correct about that. And it's only, growing much stronger, and the influence is growing much larger of crypto, always in the center of conversation. Now in the Oval Office, they're going to be putting out a crypto report here soon, or maybe some executive orders. That's the level crypto has risen to. And so that's really what we were trying to front run. We were trying to tell everybody that even though crypto prices were dropping, that this was a bigger, not just an asset class, this is a life-changing piece of technology. This is a world-changing piece of technology, blockchain in general, especially when it comes to censorship resistance and decentralization, some other things that I'm very passionate about. So that's what really drove me. Ever since, I basically should have been dead back in 2007, my focus has always been giving back, because I've got a really sweet life. I had a really sweet life before I got into crypto. I have a family. I have 3 kids. I love my kids. I coach their ball teams. I go to all their tennis matches. I do the whole thing. I love being a dad. I love being a family guy. I've had the sweetest life since I woke up out of that coma in 2007. And I want other people to have that. And so really that is what has fueled me to not just help people in that area of life, in that arena of life, but to move on into now, from a financial perspective, be trying to teach people on how to get to a different level and find financial freedom. I mean, nobody wants to struggle. And, that's really what we try to get people to understand.
Okay, cool. I'm just like gathering some information here, because I guess what I want to do at some point is just find out how congruent that is, or how honest that position is, when, and I don't know what you shill in terms of shitcoins, but I guess my position on that is, if you really want to help people, you'd want to, like, the only thing I've seen from you is like a recent thing about proof of work, which to me, the kind of stuff that you're saying,
I thought you didn't.
Completely mindless. No,
I saw a little. Was, though, right?
I saw a little.
You didn't know who I was.
I saw a little Twitter clip.
That's usually the person that attacks me. That's their first line. It's like, I have no idea who you are. Palm did the same thing. But anyways, go ahead. I'm listening.
That's all right. So, you talk about wanting to help people. How do you see that being congruent with, I guess, I don't know. Actually, you know what? Before we get to that question, you mentioned before blockchain technology and censorship resistance. Can you talk me through that? How that sort of fits in the same sentence?
Yeah, I think that if we were to go back to, I mean, we all understand the ideals of decentralization, right? Not one central point of failure, not one, entity. Like, I always use the example of Facebook, right? Like, if Mark Zuckerberg walked into the Facebook office and he said, hey, there's this guy, Alex, I would really like to, I didn't like what he said on Shark Tank. So I really want to know more about this guy and his failed companies and stuff like that. Like, I want to know, specifically, like, what data points do we have on him, so I can kind of understand him a little bit better. Mark Zuckerberg has the power to do that. He has the power to go into Facebook and demand that information, and one person can pull it up and hand it all to him. And, you know, in the world of blockchain, we don't have to have those single kind of authoritarian power structures to where you've got one person. I mean, if you look at, you know, let's say Brave browser, for instance, and basic attention token, the Brave browser, the way that it works, it has all of your data kind of stored in little shards that float around, you know, the Brave browser ecosystem. There's not one person that works at Brave browser. You know, Brendan Ike can't walk in and say, hey, let me recall all these data points on all of the different websites that Alex has visited. So, you know, you don't have that same kind of level of centralization when it comes to the way that data is stored. And the way that data is stored and decentralization, they go hand in hand. And then when you move to the censorship resistance, when you have a person like Jack Dorsey that can walk into Twitter and say, you know what, I don't like this guy that was on Joe Rogan. Now, of course, Jack Dorsey, of course, we know he's moved on from Twitter. I know he's a lot of y'all's heroes. You know, you should get matching nose rings. But I think that the fact is that, you know, Jack Dorsey can walk into Twitter. He could when he was in charge of the company and say, listen, here's the thing. I don't like that this guy who created the mRNA vaccine, I don't like that he's out there spreading this nonsense that goes against my political overlords. So you know what? Let's go ahead and just ban this guy's account. And they can do that. The way that decentralized social media would work would be there is an agreed upon set of rules that works with smart contracts to where if something violates one of those very specific rules, it would, you know, we obviously don't want a Twitter where people are putting child porn, for instance. We obviously don't want that, correct? I'm thinking everybody could agree that's a terrible thing. Nobody would want to see that on any platform. So there's got to be
maybe Vitalik would, but let's just, you know.
I don't even know if I have a response for that. But, you know, I has very, you know, serious allegations there. But anyways, I think the point here is that, you know, we would have basic things we would want to agree to. But outside of that, we don't want rule changes on a whim based on one person. You know, I had you know, I used to run a business, my first kind of like, you know, online business that actually led me to Bitcoin. It was a ticket business. And, you know, I posted ads on Craigslist for sports tickets, and people would buy those tickets and I would get a commission fee based on, you know, people wanting to go to those events and going to my website and going to my ad. Well, Craigslist made a change on their website overnight. It was just one change that they made. And all of a sudden my online business that I had spent years building, my income dropped 90%. You know, and that was really one of these things. Like I understood, you know, you had the YouTube shooter, and I certainly do not condone any violence by any stretch of the imagination, but you can certainly understand the mindset of this young woman who has spent all of this time building this YouTube channel to try to find, you know, create a new way of income for herself. And then all of a sudden, without warning, YouTube completely just deletes her channel or removes her from the partner program, whichever one it was. And she was no longer able to make an income. And she can't get any answer. There's no answer for why she was censored. And these are the types of situations that really make people against centralization and kind of this faceless corporate feel that we have to social media today. And I think it's a really, really big problem. And we've seen the rejection of Facebook by young people. We'll continue to see it. Meta's going to ultimately, you know, they have a monopoly on the technology, obviously with the Oculus. But outside of that, I mean, there is an utter outright rejection to Facebook, a rejection to censorship. We're seeing it on Twitter. I mean, we've got all these alternative Twitters. None of them can really get any traction because the system is built you know, by big tech to be able to keep competitors, you know, from really rising up in the space. But these are things that I'm passionate about. And these are things that we certainly want to see in the future as a more decentralized world.
Ben, I think we all agree that we want a more decentralized world. I'm more interested, maybe first a rebuttal from Alex, but I'd more like to get into the differences between your respective asset classes and why people should consider a Bitcoin only strategy versus a crypto strategy, which seems to be like an infinitely diverse portfolio with no one right answer.
Well, I guess where I was gonna, you know, if I may.
Yeah, sure. Go ahead. Sorry.
So you seem to have described a bunch of problems, which more or less, you know, we can agree with. You know, things like the capacity for an individual to, or the capacity for some sort of entity like Facebook to come and censor you and all that sort of stuff. I mean, I actually think they have every right to censor whoever the fuck they want to. Likewise, Twitter does. You know, I believe in private property rights. I'm not a communist. If you've built something and you have a house or a business or whatever, and you don't want someone in there, you have every right to throw them out.
Just a very important clarification, though. Without the protection of the government, though, that's where this gets dicey. Is they're private businesses, but they have the protection of the government because they're considered to be moderators by
which I agree with. Which I agree with. So I guess my question to you then is, how is that solved by some magical technology called blockchain, which, mind you, doesn't fucking exist? How is that solved by distributing the data? Because from where I stand, whether it's Ethereum, whether it's Cardano, whether it's any of these social media or decentralized social media companies, by definition, every single one of them are just basically using buzzword salads to deliver a shittier version of the products that they're trying to replace, but operating them. I mean, the very fact that an Ethereum foundation exists, or that any initial VC seeded a crypto or a blockchain, quote unquote, exists, undermines the very point you're trying to make. I mean, when you look at Bitcoin, Bitcoin's not censorship resistant because it's decentralized. Bitcoin is censorship resistant because there is a cost to reverse transactions. There is an economic cost associated with it. To reverse any of these other things, or to change the censorship resistant characteristics of it, it doesn't require a cost. It requires an internal consensus of a foundation or of a group or a management team or a board or a set of VCs or something like that. So I guess you're talking about all of these problems that you want to solve, but the solution that you seem to be putting forth is to replace one group of operators with another group of operators, but on a substandard set of technical infrastructure.
Well, I mean,
how do you reconcile those?
Certainly agree that the first website ever was definitely better than the New York Times delivering information. Like, right, we can make that right. Like the first, you guys remember the Space Jam website? Anybody seen that one? It was a fantastic website. You know, I think what we're talking about, we're the very birth of this technology. We're the very beginning of this. And to try to compare where this should be in its full growth cycle to where it is at the beginning, I think it's an asinine argument. We don't know where this technology is going in the future. We have some ideas, and you're right. Maybe it all fails. Maybe Ethereum fails. We know it's got gigantic problems right now. Maybe Cardano really does end up being vaporware. They just released stuff on, you know, their NFTs, and it clogged up their network. So, you know, maybe they've got some, you know, going back to the drawing board. Solana paused for 72 hours. Big problems there, right? You know, Polkadot just at the beginning of figuring out what this is going to look like now that they've, you know, got their parachain auctions running and the project's chosen. But it's the beginning of all of these.
And yeah, that's the beginning. How can the beginning is built on a foundation of like, if you begin building a house on quicksand, it doesn't matter how good your architectural drawings are, you're going to fucking sink. Like the base presuppositions of all of these are a total fucking hypocrisy. And that's the biggest problem here. Is like,
I don't think so, because you're basically talking about group governance versus small closed governance. Okay. That's really what you're saying. What you're saying is we're taking operators of Twitter, the people that run Twitter, and we're saying that's a small group of people, and we're replacing them with a different group of people. The difference is that group of people has a say through governance and owning tokens and staking nodes, depending on whatever the project is and the different way that it's set up. But you can choose to be a part of that governance or not. You can't choose to be a part of Twitter, play a role in Twitter. No, we can't. You can't choose.
Yes, you can. As a user, you can choose to be a part of Twitter.
Well, certainly, you can choose to use Twitter or not, but you can't choose to be involved in the governance of Twitter. That is something. That's why we're seeing people create alternatives.
You do realize
really
governance
get traction because they don't
scale.
have use case, because you can't just come in and help with the decision-making process. And that is what this all is.
Governance can't scale, right? Like, this is why, you know, I mean, as much as I hate
it's all an experiment. Like all of this is an experiment. It's an experiment of you know, governance of people that are involved with the project, either from an investment standpoint or, you know, depending, it's hard to say in large groups, you know, or kind of speaking.
You've heard of Dunbar's number, right?
All these projects are so different. They're all experiments. And I think that's the big difference between you and me. You can't handle the experiment. You don't want to see the experiment. You don't want to see these things play out. You want people to be of the mindset, that you are. That
No,
Bitcoin is
I
the
think
one
you're
and
in
only
a
way. And if you disagree with me, you're an idiot. And you
no,
have the holier than thou way that you speak about this, that the
absolutely,
rest of us, the vast majority, and we're obviously
because I
also
am
talking
holier
about,
than
I know
thou.
Alex, or I know that the moderator wants to keep getting back to, you know, from an investment standpoint, we're talking about financial and philosophical, and they're two totally different things
Totally,
here
yeah,
when
yeah,
it
yeah.
comes to this.
So I think I'm hearing echoes of your, you know, inner junkie, in the sense that, you know, I'm not willing to experiment. Like, I don't want to chuck fucking heroin or shit up my fucking veins, because I don't see the need to go and explore that kind of shit. So in evolution, there's a concept called explore, then exploit. And what nature naturally does is, as it progresses, it discovers things along the way. So out of 10 experiments, it discovers one that works, and then it doubles down and exploits on that. So the difference between a Bitcoiner and a shitcoiner, for example, is the shitcoiner is a perpetual explorer, a perpetual dabbler, someone who doesn't know how to build depth, but instead chooses to build breadth and width, and uses all sort of intellectual fellatio to basically validate or to substantiate why they're doing that. Whereas a Bitcoiner understands that there are time-tested principles, there are truths, there are objective truths. You know, for example, you don't go and try and experiment and test that 1 + 1 = 2. Like, that's an a priori truth. It exists. When you find and you discover truths, like proof of work is an example of a beautiful truth. Proof of work is something that exists across every single dimension of life, right? If you want to go to the gym, you don't proof of stake. You don't hire somebody else to train fucking for you and hope that you're going to lose some weight or, you know, gain some muscle. You go in and you do the fucking work, right? So if you want to become wealthy, you go in and you do the fucking work. Or you can take the proof of stake approach, and you can be born into some fucking family. You can be close enough into to the monetary spigot. You can use your stake. You can use your influence to leech out of the system, which is basically what every single one of these fucking crypto projects, you know, aspire to do, right? Instead of being able to outcompete governments and central banks, they just try and recreate it on a new digital network and literally recreate this fucking problem that Bitcoin is trying to solve. And then we have perpetual explorers like yourself come out and say, yeah, let's just fucking explore. Let's just walk around in circles. Let's ignore the thing that is solving the biggest fucking problem on the planet today. The biggest problem on the planet today is a concentration of political power that has come as a result of the concentration of economic power. And
Right.
those two cycle each other and creates a consequence on the planet in which you have static class structures in the world, where if you are close enough to the monetary spigot, you can socialize your losses and privatize your gains. And as a result, suck the very productivity out of the system.
Why do you think why do you think that over half of the top 100 Bitcoin addresses were created from 2019 on? Why do you think that is?
Because people are buying the shit.
Yeah, who has enough money out there to create out of thin air one of the largest 100 Bitcoin addresses? Who do you think it is?
It doesn't matter.
No, it does matter, because
no,
what you're saying here is you've really talked yourself into a corner here, because yeah, absolutely. When you look at how much Bitcoin the United States owns, when you look at how much China owns, when you look at how much Russia owns, when you look at how much JP Morgan owns, when you look at how much Goldman Sachs owns, when you look at how much the other bigger institutions own, it does matter, because they have control over the Bitcoin price. So you're telling me that you think that the average person out there, the retail investor, that we are the people that are moving the Bitcoin price up and down.
Who gives a
the
fuck about
Bitcoin price is so heavily
I don't care about the Bitcoin price.
It's not even funny, and it's manipulated by the very same people that are the system that you're saying that you're trying to break.
And lemmings like you, are worried about the price.
If you can't beat them, join them. That's how they manipulate from the inside. Bitcoin, too slow to be adopted. Now it's been infiltrated left and right from the very people you guys say you're trying to fight. And look, here's the fact. People like you that come from money, people like you that come from money, that have money, it's okay to make money through Bitcoin. This is where we get to the financial versus the philosophical ideals behind Bitcoin. The average person out there cannot change their life through Bitcoin. Right now, today. Why? Because of all of these larger institutions that have came in and put such a monopoly on the Bitcoin price. And to deny these people and to call them idiots, to call people idiots because they want to explore ways to find financial freedom, that's why people don't take Bitcoin maximalists seriously. seriously. They
much,
don't take them seriously because you're all holier than thou, because you come from a perspective, you made money through Bitcoin, you have money through Bitcoin, government print? You don't need to invest in anything.
Can you answer that question? Can you answer that question? How much Bitcoin can the US government print?
Once again, the printing is
how
not
much
the
can
problem.
they print? Yes,
it's still
yes,
the same system of control.
That is the fucking problem.
It's the same system of control.
No.
The same
it's
system.
The control of
they're
issuance
owning it
of
and they're
money
moving
that
it
is
from
the
the
problem.
inside.
No. The problem is not who has money. The problem is who can issue the money. That has been the problem from day one.
I don't disagree with you. I don't disagree with that. So like, I think one of the things that is probably most misunderstood about me, I mean, I've got Bitcoin all around me. I own a lot of Bitcoin. I'm 35% Bitcoin in my portfolio. I agree with the larger ideals of Bitcoin. I just think it's too slow. I think that it's not great.
Sell your Bitcoin. You should sell the Bitcoin.
Guys, before we get into that, I want to take a second. Bitboy, before we move. We're about and Alex both. We're about halfway through here. I want to take a second to remind everyone on Twitter Spaces, hop on over to YouTube, get the full visuals. We're gonna start dropping some Bitcoin in the chat via the carrot. You're wearing a nice tie-dye shirt, Bitboy, that everyone should come take a look at. And you know, before we spill too much blood on the canvas here, I want to make sure everyone hops on over to YouTube, where we're gonna drop some Bitcoin in the chat. I also, you know, I wanted to ask. There was a point that we kind of skimmed over, Ben, and that would be You said many of these projects, and you named a lot of the projects that you support, are in an experimental stage. Oh. How can you, in good faith, then put those products to your followers and promote them for retail investors? If they're simply in an experimental stage, I think we can all agree Bitcoin is past the stage of experimenting. This is a vetted, tried and true technology. So that's something I was wondering if you could respond to.
Yeah, well, I mean, you can obviously point to, like, you know, let's look at Netflix. I mean, Netflix, Peloton, right? They're definitely proven technology. They're proven companies, proven here, and you see how much they drop. There's no such thing as a guaranteed investment in the world. I mean, outside of, if you look at treasury bonds are basically held together by the belief that, number one, a country is going to continue to exist. And number two, they're going to continue to tax their people. So you feel like that's about as guaranteed as it gets, but who knows? You know, you get an EMP to America. Who knows what the country will look like in, 5 years from now? So there's no such thing as a guaranteed investment. And when we say the word promote, I think it's really important to understand the difference between an actual promotion, a disclosed promotion, or a sponsorship video, which we've certainly done on the channel over the years, which every single one ever in the history of this channel, we've, disclosed is open. We run a business here. So it's just like same thing with any other, company out there. You do ads. We have some ads. We do some sponsored segments, and things like that, as opposed to just like educating about what crypto, what these different projects are doing. Ethereum, for instance, I'm certainly heavily invested into Ethereum, heavily invested in Cardano, heavily invested in XRP. And I let my audience know that we're actually the only channel that shows our entire portfolio. We've done 3 videos where we show the entire portfolio top to bottom, completely transparent about what we own. But if we can't talk about the top projects in crypto, then, I think that's a little bit of censorship right there. People say, you can't talk about Ethereum. Ethereum is working to some extent. It definitely has problems. DeFi is budding. We have NFTs that are, going absolutely massive and parabolic right now. We have gaming coins that we think are kind of probably the next big wave. We have DAOs. It works. It's just clunky, which a lot of people would say Bitcoin is very clunky with the way that it works with its transaction speeds. It couldn't possibly at this point. Are
you still in 2017 transaction speeds? Oh, Jesus. Yeah. Look.
So are you actually here with an honest face and intellectually honest, going to say that Bitcoin is fast? It's fast enough to serve the needs of the world if we were to make it the world currency tomorrow?
No, Bitcoin is a settlement network. Bitcoin is not designed to be fast. Okay, so just like the human body has arteries, it has veins, and it has capillaries, and they all serve a different function in the distribution of blood around the body. So all natural systems build in layers. You do not put throughput into the same place as you put settlement. That is fucking stupid. Okay, this is why Bitcoin has the Lightning Network, and this is why Bitcoin is growing in layers. You do not sacrifice the censorship resistance for throughput. That's a moron's game, and that's why Bcash and all the rest of the sort of stuff lost. Bitcoin, see, this is where I think a lot of people get wrong and they get lost. the disease of the modern world, and I suggest, you educate yourself and read something like When Money Dies by Adam Ferguson, which is the story of Weimar Germany between the 20s and the 40s, right? The exact same shit that's happening in the world today was happening back then, which is everyone thought they were getting rich. Everyone was running around in investments. Everyone thought they were making money on the stocks, on this, on that, on fucking used cars, on the whole lot, right? The cancer of that high time preference mentality is, in our day and age, manifest in fucking overpriced JPEGs, stupid ass fucking shit coins, and all of this stuff. Bitcoin is not an investment or get rich quick scheme. It is a don't get poor slowly scheme. Bitcoin is important because me as an individual holder of Bitcoin.
Can we stop here? Did you get rich with Bitcoin?
I did not get poor.
Just want to be clear, like I just want to be clear, like you did get rich with Bitcoin, right? Like most people that are in your way of thinking, they may say it's not a get rich quick scheme.
All I did,
but you did.
Guess
How
what?
many zeros did your net worth grow because of Bitcoin? Can we just be transparent?
I can't touch my Bitcoin for the next 25 years. Even if I wanted to fucking spend it, I can't touch it because I'm not looking to get rich. I'm looking to build a dynasty long term.
But why? Just like philosophically, you won't do it, or you have it somewhere in an account that you can't touch it?
Yeah, I've locked it up so that it cannot be fucking touched.
Okay.
So this,
but
I will not be
on
used
paper.
by
How
Bitcoin.
much has your net worth grown since you started buying Bitcoin?
It's done well, of course.
Substantial, right? Okay, I just want to be clear. Like, want to make sure that we're congruent with what we're talking about here.
We are.
That you're saying it's not a get rich quick scheme,
but there's a reason why
you did get rich quick through it.
There is a reason why. There is a reason why. That is because my proportion of the network cannot be diluted. That's the fucking innovation. So Bitcoin is predicated on the idea that one should be able to store the product of their labor in a form that is unconfiscatable and undilutable. Shitcoins are predicated on the idea that you can print your own money under a new banner for a new idea for whatever buzzword they want to do. There is a difference in ethics. And what you're saying in the beginning, where you want to help people, what you're doing is you're doing them a disservice, because the best way to help people is to encourage them to do something useful with their life other than gambling, so that they can go and find a craft.
There's probably no other channel out there that's made more millionaires than my channel. And that's fact. People come to me all the time. We have meetups over the country. I guarantee you take any of your maximalists, you have a meetup, we will crush them.
In the Weimar
coming
Republic,
to my meetup, telling us about how we've changed their life. We're going to be doing one in Austin this week.
Stupid.
We got 600 people signed up for it, coming to talk about how much we've changed their life.
The lemmings all want to get rich quick. The lemmings all want to get rich quick. Just the fact that you can prey on idiots.
Money is helpful. Money is helpful to people. I don't understand.
No, what's helpful?
Rich, holier than thou people, like, I can't get behind the things that you say because it's so intellectually dishonest.
No.
So it's better for people to understand philosophically the way of money than it is for them to have enough money to buy a house for their family.
Absolutely.
That's what you're saying.
Absolutely.
Lemmings.
Absolutely.
That is the most asinine or incredibly idiotic thing I've ever heard.
Absolutely not. No.
It's more important for people to understand money than to have money and change their lives and give themselves a
you don't give a man a fish, you fucking feed a man to fish. Sorry, you teach a man to fish. Okay, that's the difference. What you want to do is you want to give people fucking fish so they become stupid, dependent lemmings. This is how the government functions.
No, that's implying we don't do education on my channel. I mean, and that's absolutely not true.
Okay, whatever. You educate them on opportunities, right? So that they can make some quick money, right? The goal here is not to teach people to just randomly fucking make money off stupidity, because you could teach them to, like, their chances are just about as good at the casino. A person teaching someone how to play blackjack or shit like that could make the same argument as you can. The argument I'm making is that someone teaches someone
to play blackjack by counting cards and by the actual rules of successful blackjack, where over time you do win. It's a sure bet. If you play the exact same way, you do win. It's just like playing poker. If you consistently play the right kind of poker over time, you do win. So yeah, sure. But it's certainly not like going and putting money on a roulette wheel. That's always a losing strategy.
That's okay, fine. That's maybe not the greatest analogy, but what understanding money first and foremost does to a person is it lowers their time preference. And in lowering their time preference, it encourages them to adapt their behavior towards low time preference behavior. Bitcoiners seem to be getting healthier, smarter, they read more books, they become family people, they're interested in helping the world long-term. They're interested in building a dynasty. They adapt themselves to that. Whereas shitcoiners run around talking about how much millions they've made. They buy a fucking Lamborghini. They spend it all on hookers and coke. It's a completely divergent.
No, that's what you're saying.
It
right
is a
now
very
insane.
divergent.
Like, I can't believe with a straight face you can actually say, you can take a gigantic. You must be racist also, because you can't take a gigantic group of people and compare them to another gigantic group of people and make blanket characteristic statements about each one. That really shows
make it
your
about
cards.
everyone.
That shows that the presupposition that you have towards people who invest in altcoins, you really believe that every single person that listens to this, if you're not a 100% Bitcoin, you literally think they are scum of the earth, garbage. And I can't believe people like you actually exist and get on from day to day without having somebody that, you know, just frankly slap you, to be honest with you.
Generally speaking, most of them are scumbags. I would 100% stand behind that. I mean, you know, at the end of the day, if your
sound like you belong in
world,
Germany in 1932 with the way that you're talking, to be honest.
Not at all.
Well, you're talking about other people.
I belong more to
your moral
like
compass is gone, sir. You have no moral compass with the things that you say.
I'm an exclusionary principle maximalist. I exclude people, very much so, because
my gosh, it really is like racist or sexist or homophobic. Absolutely. It really is the same thing. I like. So
the difference between you and me, is that you like to be, you know, a communist. We're all in this together. You know, we're all the same. We should kumbaya, bring everyone into the same group.
Calling me the communist?
Well, yeah, exactly. Because, you know, that's kind of your frame of reference.
Because I believe the best in people. Because I believe the best in people, and because I don't take certain groups of
generating the worst in people
and say that they're scum of the earth.
I think
you're generating the worst in people.
Excuse me. I think the question that we might need to address is, Alex, what kind of, you know, forgiveness, like tolerance or path to redemption is there for people who are in this experimental stage of their Bitcoin journey? If we can agree that that's the endpoint that you see for humanity and for people, I think people who engage naively, I mean, it's probably unfair to characterize them as scammers. So I'm just interested to see at what point, you know, what's the road to redemption there?
There is, I call it climbing Mount Stupid. And then there's a difference, you know, there's people who want to stay on top of Mount Stupid and suffocate in stupidity. And then there's people who are willing to climb down from Mount Stupid and say, okay, I've come up here. I've realized that I was kidding myself, that I was trying to you know, like that my whole reason for existence was to fucking make a quick buck. They come down and they realize, like I always say, you know, with Bitcoin, I came for the money originally. Like I was trying to trade it and thought I was a genius. You know, I dabbled in shit coins. I read a bunch of white papers. I lost fucking 50 points of IQ. I realized that this was the dumbest shit ever. And then I went and I actually built a fucking business. And then I started writing about Bitcoin. I started exploring how Bitcoin impacts philosophy, society, physics, anthropology, all of these varied disciplines. And what I did was I lowered my time preference. I started behaving like a better version of myself. I started respecting myself mentally, spiritually, physically. And that's what sort of changed my behavior. And I think people who are actually interested in doing the exploit component of explore. So, you know, they come, they explore, they fuck around, they climb out stupid, then they discover some truth. They'll double down on that. Those who choose to sort of stay there, they are either stupid or scammers. It's one of the two. And they might justify it through making money or, you know, whatever other thing they want to do. I mean, most of the people that are young and making money and all that sort of stuff, they're just trying to fucking flex because they're compensating for something that's missing inside of them in the first place. Like I didn't have to make money to compensate and miss something, you know, like Richard Hart is a fucking perfect example. You know, the guy's like, you know, come out, printed his own fucking shit coin, made a bunch of money, talks about his fucking Rolexes 24/7 and still can't get fucking laid. You know what I mean? Like these people, there's something missing. And I think once you strip that ego component and start to actually explore some truth, you start to become a more wholesome human, as opposed to being so focused on trying to fucking just make money, irrespective of whether or not you're actually supporting the very thing that you're saying you're against. You're supporting a new form of overlords. You're supporting a new form of seniorage. You're supporting a new form of proof of stake. Literally, it's in the fucking name. Like, central banking is the original proof of stake. You're supporting the new version of it, just replacing fucking oligarchs, replacing overlords. Like, that kind of behavior, it's morally inconsistent. So for me, what I'm interested in, this is why I'm an exclusionary principle maximalist, is I'm interested in surrounding myself with people who have integrity and have some fucking virtue and are willing to forego the short-term easy money for the patience of a long-term dynasty. So I'm not here to fucking make a quick buck. I'm here to remind people what Bitcoin actually means.
You already did. To be clear about that again, you already did make a quick buck.
It doesn't matter. And everybody can continue to do exactly what I did. All they have to do is put the excess product of their labor. No. They just need to be smarter than everybody else.
Bitcoin. And,
they just need to accumulate Bitcoin.
Admit that you don't know as much as Alex, and then you are going to be on the path to riches. I tell you, this is a cult. Like, the way that you're talking about this, literally, you are talking about this like a cult leader. I don't think this is going to age very bad. You're going to look back on the way that you talk in 10 or 15 years from now, when, I don't know, when maybe you mature. You're not going to believe the way that you talked about things. It's funny. You're talking about Richard Hart, which everybody knows the man loves a Rolex, and you're trying to equate ego to that man and saying that these people, when they finally get to a peak, they'll understand that they don't know everything. You're coming off exactly the same. You're coming off exactly the same as Richard Hart. You are the Bitcoin maximalist version of Richard Hart. You know everything. Nobody else knows anything. Only like-minded people to you are accepted in your kingdom of Bitcoin heaven.
Absolutely.
That's asinine.
Yes,
I
absolutely.
I never in my wildest dreams expected to come onto this debate. I didn't know what we were talking about. I didn't know what the debate was about. And hear this. I thought these people only existed in typing form on Twitter. I didn't believe people like this actually existed in real life. So I'm actually like honored to finally meet someone like you.
Absolutely, dude. I will call it as it is. I have absolutely no fucking remorse and no intention in surrounding myself with morons.
So that's the first step to wisdom. No remorse.
Absolutely. You do not surround yourself with morons. You surround yourself with intelligent people.
Oh my God.
And there is a consensus of intelligent people in Bitcoin. And in the contrary, people who continue to lie to themselves, like, you talking about censorship resistance and then, talking about Ethereum in the same sentence, that is a fucking lie. So that is a example of stupidity, which is something that I don't think should be followed or listened to. And that's my exact point. It's like, your character is one in which is leading people down a strange path in which they have a false sense of security, a false sense of confidence, and a false sense of riches. They haven't become better people to earn more wealth. They have gotten lucky tripping over and falling onto a shitcoin that you happen to suggest. That is not a path to integrity. That is not a path to becoming a better human. Yeah. That is the path to becoming a fucking dumbass.
So we'll just follow your footsteps. I think we understand each other now. Like, I don't think I realized I was really debating a meme until quite recently. So I'm all for it. Like, I understand, like now I get your way of thinking. And now that I don't understand that you truly are like a cult leader, and that this Bitcoin maximalism is certainly
I'm not a cult leader. I'm only a cult leader.
I don't think every Bitcoin maximalist is as culty as you. And I think you would probably, like, you seem like the kind of guy, you would get around people that would, probably think similar to the way you think, but you can find one thing that you disagree with, and then all of a sudden they're terrible people and they're, going to Ethereum hell for sure. So you must be really fun to be around as a friend. I tell you, I bet you have some really great friends.
I've got quality over quantity. Quality over quantity.
Koala bear.
I have a question for each of you. So Bitboy, I mean, how are we going to address the fact that a lot of your strategy, these crypto diversifications, seem like speculative gambling to me? And I also, at the same time, to be fair, I mean, I want to ask Svetski, what aspects of Bitcoin, I mean, why is it not a cult? I mean, I think that's a charge that you made, Bitboy, and we should address that.
Yeah. So the question came to me first, and certainly say, we have always said on my channel, this is purely speculative. It is purely speculative. Bitcoin prices are purely speculative. When you look at the value of the Bitcoin cycles, I was reading the tweet thread I read on my channel today from Bob Lucas, where he was saying that, there was definitely a situation to where we could still be within 4-year cycles and Bitcoin not have even topped over $18,000 over this cycle. Fortunately, we did get there. We didn't get as high as many people thought we would get, but it's speculative. There is no guarantee where Bitcoin is going. Yes, it's been around for longer. That's why the coin that occupies, for the most part, the largest percentage of my portfolio right now, just because of some things we've done internally, like we do own a little bit more Ethereum for full transparency than we do a Bitcoin, but it's very close within a couple percentage points. That's why it makes up a majority of our portfolio. And we tell people coming in, you want between 30 and 50% of your portfolio to be Bitcoin. And we try to break it down. The more speculative the asset, the less percentage of your portfolio. You want to go invest in coin 749 on CoinMarketCap, then it needs to be less than 5% of your portfolio. You need to have less than 5% of your portfolio geared towards projects in that arena. You want to have the vast majority in the top 10, top 20. We've shown that if you go to the top, if you go to the top 10 from 2018 in January at the peak, all of those 10 projects that were in the top 10, they're all at least in the top 100. And that shows that there is some level of stability for the projects higher at the top. However, you apply that to the top 100, it's vastly different. And so people understand that mindset of when you're investing in different altcoins, you need to put them in buckets. Your top 5 coins, your top 10 coins, you've got to have different strategy. You have to have different size of those buckets in a descending order. You want the smallest percentage of your portfolio in the most speculative assets. But when you look at something like, say, crypto.com, for instance, to say crypto.com is a hyper speculative asset, that's really negating all of the fundamentals and the analytics. Take away all their marketing practices, but that's just taking their fundamentals and their analytics and saying like, hey, look, this is a successful exchange as of right now. It could change overnight. Peloton tanked overnight. Netflix tanked overnight. It could tank overnight. But right now, looking at something like crypto.com or FTX, these are general things that we can look and say, this is probably a little bit less risky than, I don't know, project 312. I don't want to get too specific with projects that low. But the point is that, yes, there is speculation. That's where we're at in crypto. We are not at a place yet where the actual fundamentals and the speculation, or the actual fundamentals and the hype, match each other. We don't have a place yet where the fundamentals and the ultimate potential in the use case are linked. We have some, things we can look at, like the number of transactions on a chain, but those can obviously easily be fudged as well. I don't think it's until the next Bitcoin cycle in 4 years that we're going to actually see that connection. And that speculation.
See, this is interesting, though, because you denominated it in Bitcoin cycles. I mean, that would point to the majority of us who think that, all these cryptocurrencies are riding on the coattails of Bitcoin. They've failed to distinguish themselves meaningfully from Bitcoin's use of block space to the extent where they ride and die on the US dollar price of Bitcoin. So
yeah, I don't disagree. That's not a stance that I've gone against. I mean, that's why you want the biggest percentage of your portfolio to be in Bitcoin. We believe in Bitcoin more than anything else. Ethereum, very close. I think that, there's a very real scenario where Ethereum passes Bitcoin, and then that changes the entire debate, But at this point, we're still riding or dying on Bitcoin, and we are not to a place where we're seeing even the layer ones break away from Bitcoin. You look at Chainlink, for instance, it had a run in the bear market of 2018, 2019, early 2020, where it did seem to decouple from the Bitcoin price, but it's temporary, So that is where we're at right now. And these are the honest conversations we have on the channel about where things are.
Then help me understand if you're largely, what percentage are you advocating that people have in Bitcoin? And why does your channel not
30 to 50%?
30 to 50%. Would you say Bitcoin educational, content makes up 30% to 50% of what you do with your time, or is it largely based on speculative, extremely?
Absolutely. If you go and you look at any live stream we've done, the first, 15, 20 minutes of every single live stream, no matter what comes after that, are, dedicated to looking at where Bitcoin is, looking at the Bitcoin chart. Almost all of our story, like today, we probably covered 80% Bitcoin and how it relates to the overall, obviously we're talking about the Fed meeting, talking about stuff like that. So yes, we have a lot of Bitcoin content on our channel. Around the blockchain, we almost always, our afternoon show, we almost always have a Bitcoin, segment. We don't do, and that's probably a good reason why a lot of our pre-recorded videos, which we're actually doing a lot less of, we're working on the quality, more quality and less quantity of those, why less of those are actually about Bitcoin and many of them are about altcoins, is because we do spend so much time talking about Bitcoin, during our live streams, because the crypto markets live or die on what Bitcoin is doing.
Svetsky, do you have a response to this? It seems to me then we're debating the remainder, the 40% to
yeah.
50% of.
No, I think we're still debating the whole 100%. Like for me, speculation is just another word for gambling. And in a functional world and on a Bitcoin standard, the returns on gambling severely and significantly diminish, right? When the product of your labor can be stored in something that cannot be diluted, your behavior changes, your behavior adapts. Speculation is something that is most rampant during peak fiat. So just like in Weimar Germany, just like anytime some sort of state intervention causes the loss of faith in a currency, which is what we're seeing in slow motion at the moment, people chase gains. And mind you, like, so I will give a benefit, at least insofar as, maybe chasing these gains is better than becoming broke, dumb, and destitute and living in a cardboard box, right? But it is still an inferior path to discovering something like Bitcoin and then doubling down on that, putting your time and energy into building other skills, other things that add value to society, and storing the excess product of your labor in Bitcoin. So that should be the game plan. Now, mind you, there is other people out there. I mean, I know some Bitcoin maxis who purely just trade alts so that they can put stuff into Bitcoin. Now, they can do that. I personally don't like to do that because I don't like to give liquidity to scams. But at the end of the day, like, I think to answer your original question around the cult thing, like, truth, it's not a cult. Like, that's kind of like saying that physics is a cult, and being a gravity maximalist or being a speed of light maximalist or being a thermodynamic maximalist is being a cultist. It's not. Like, we know that Bitcoin is enforced by the individual. We know that it has fixed rules which are enforceable, as I said, by the individual. We know that it scales in layers. We know that Bitcoin's verifiable. We know that Bitcoin emerged through voluntary consensus. We know that it's resistant to censorship. We know how anti-fragile it is. We know there's no monopoly on the issuance. We know Bitcoin's transparent, like it's a 8-9 page document with a single set of rules, which is open to everyone. We know that it's neutral. We know that it's irreversible, and we know that it's an incarnation of pure digital private property. Like, we know this, that this is not, it's not an attempt to create a marketing plan or some speculative fervor over something which changes its fucking narrative every 6 months, a la Ethereum with NFTs and CryptoKitties and world computers and fucking whatever else, whatever other scam it's managed to to loop out, STOs, ICOs, fucking EIOs, and whatever the rest of the fucking acronyms are. Like, Bitcoin is there, it's verifiable, it is actual truth. And what Bitcoin maximalists go out and do is they say, hey, look over here, we've discovered something that is as important as the discovery of thermodynamics. And what you can do is you can store the product of your labor, sir, in something that nobody on the fucking universe can rob you of. And once you've done that and you've outsourced that part of the uncertainty that is involved in life, you can then focus on producing something, be an entrepreneur, be an artisan, be a fucking artist, be an engineer, be something useful. Don't sit there, look at fucking charts like a degenerate, waste your time on fucking YouTube, worry about what the next pump and dump is going to be, worry about what the next fucking marketing plan of the next fucking shitcoin is going to be. That is wasteful, and it's not going to make you a better person. It's going to make you a weaker, shittier, uglier, fatter person. And my position is that you should do the opposite of that. You should do something useful. So that's really the position. It's nothing culty. I mean, and if you do want to like position it as a cult, by all means, fine. Then at least it's a fucking healthy cult, because there's nothing here about like, oh, you should, I don't know, drink some fucking Kool-Aid and, poison yourself or something. Like, the message is simple. Bitcoin is perfect fucking money, and perfect money means that you should try and acquire some before the rest of the world catches up, because the rest of the world will catch up not because they want to, but because they fucking have to. Starvation is a hell of a fucking motivator. And that's literally what's going to happen all around the world over the coming decade as the clusterfuck of a clown world that we're surrounded by starts to unravel. Like, and actually I would say, Ben, you would probably agree with this, right? We are living in a clown world simulation at the moment, right? Would you agree with that?
I would tend to agree with that. Yeah.
Okay. So do you think that can last? Okay. Do you think that can last?
No.
Absolutely not. So as that clown world eats away at the capital base that humanity has built over centuries, what's going to happen is governments will get more and more desperate. They'll create more and more stupid fucking rules. They will try and clamp down in any way they can. They'll print money. They'll fucking Jubilee. They'll UBI. They'll fucking do whatever they want to do. And in the process, deteriorate the very private property that represents people's fucking wealth. The only thing they can't influence is Bitcoin. And fucking around with all the other stuff, I can understand the tendency to want to make some quick money, but a responsible person with temperance has the ability to hold themselves back from chasing the next shiny thing and encouraging, if you really want to help those around you, encouraging them to double down on that which is truthful, that which you cannot deviate from. And that's what Bitcoin represents. And to me, when I see shitcoiners, even like, as I said, you've got the naive ones, and then you've got the ones who are genuinely trying to fuck someone over or scam them or whatever. We know that there's enough of those ones, and you know that's something you can't argue with. Either way, what people are doing is they're missing the moon for the finger, right? Like we've struck gold with Bitcoin, and then we're fucking around arguing about, like, politicking and arguing about all the other shit, when that's the piece there that matters. And that's what people need to be focused on. And I think what you should do with your audience is you should be educating them on the importance. And I mean, look, you can do whatever the fuck you want with your audience, really. It's your audience. Like, I can't tell you what to do. But what I would think would be noble is to go in and explain to them why Bitcoin is so important. But I understand, obviously, that that's not a very profitable strategy in the business that you're in. You know,
I think you're making a big mistake assuming we don't do that. Like just said, we spend every day doing that. And I think the biggest,
but then you're contradicting yourself.
I think the biggest difference between you and I, and between you and you know, supposed shitcoiners, as you say, certainly there are certainly people out there that are bad people that want to take advantage of people. If I was having all these arguments with people and you know, educating people about all these other coins, and then my portfolio didn't reflect that, and I was 100% Bitcoin, then yeah, that would not be good. I wouldn't be transparent. I wouldn't be doing what, you know, putting my money where my mouth is. But I think the biggest difference is you believe that, you know, this world exists where, you know, Bitcoin succeeding and altcoin succeeding are mutually exclusive. And most of us do. I think that's just the biggest.
Altcoins or crypto are an attack on Bitcoin. There is no other effective attack on Bitcoin. You can't turn it off. You can't shut it down. The government can't defeat it. So the most effective attack on Bitcoin is to co-opt the most broadly accepted cryptocurrency, which I guarantee will be Ethereum. You know, World Economic Forum and all those clowns, they're all going to get together and they'll issue their central bank digital currency, which is basically slave coin. And, you know, if you don't get your green pass and your fucking next booster and whatever the fuck else they're going to roll out as part of your ticket to be alive, you know, you won't be able to live. And that's the separation. Like, it's literally, Bitcoiners have nothing to sell anybody but their own freedom. Shitcoiners have nothing to sell anybody except for their shit coins. Like, it's just,
I think if we go back, I think if we go back, like, just to, you know, kind of, I guess, wrap this up, you know, I think we were to go back where, you know, we're talking about our one common ground, our one thing that we, you know, generally agree on, which I generally agree with a lot of the ideas you have about Bitcoin, which is it's a clown show out there. And I think that in reality, you know, too many times we're making each other enemies. We got to remember who the real enemies are. You know, the real enemies out there are the existing power structures. And that's why I believe they have infiltrated.
And you're on their side. and you're
No,
literally on
I
their
see. This
side.
is where I would defer with you. Technology is always going to be taken advantage of and manipulated by the traditional system, and that's what we see today. And so, whether it's the Ethereum chain, it'll be a different chain. It doesn't matter what it is. There's bad people out there, and they do want to suppress 99% of the world. And I think that that's really what we got to focus on when it comes to decentralization: is how can we break up that existing power structure? I think eventually, like, Bitcoin is going to play a really big role in that. I just think it's much further off than a lot of people want to give it credit for. I think we're going to go through a cycle where we're going to see
This is
what
multi-decade. This is
yeah,
a
I think about
multi-decade process.
50 years is generally when I think we're going to really see a real revolution. I think there's a lot of action between now and then.
Well, I think things are going to collapse a lot quicker, but this is a multi-decade emergence. Like gold took 5,000 years to emerge. Bitcoin might emerge over 50 years. The messy part is going to be this decade. My argument that you're on the wrong side of this is based on, and I hope, you evolve and change, along the process. But my argument is based on the fact that the people can influence technology. They can influence everything. The only thing that cannot be influenced on the fucking planet is the physical laws of nature. You can't influence gravity. You can't influence the speed of light. You can't influence thermodynamics. You can't influence the direction of time. And you can't fucking influence Bitcoin. Yes, people can buy it and fuck around with the price, but that does not influence Bitcoin. That influences the Bitcoin price. They are two different things. And the Bitcoin price is an emergent phenomenon. It is going to go up, down, and around in fucking circles. But what matters is not the price of Bitcoin. What matters is the proportion of the Bitcoin network that you hold. So what we should be doing is we should be getting people to hold as much as they can on that network before the fuckwits buy it, right? That's the whole fucking premise here. Now, even if the fuckwits do buy it, fine. The thing they still cannot do is they can't create more, they can't print more, they can't issue more. That is the fucking kicker. That's what changes the world. Not like issuing another coin, issuing another currency, putting together another group, fucking around with all that sort of stuff puts us right back into the same problem we're trying to solve. And that's why Bitcoin is so important. It obsoletes that. They cannot fucking change it. And I mean, leading people away from that and convincing them that that there's other things out there. Like, I mean, Ethereum is just that classic one. I fucking hate Ethereum so much because it is literally the best possible attack vector for the people you're claiming to help. It is the best possible attack vector to walk them right into digital fucking gulags. Like, that's literally what they're going to walk right into, as opposed to running a Bitcoin node and holding their own Bitcoin. There is nothing more sovereign that an individual can do. And
well, we certainly teach people to hold their own Bitcoin. We talk about custody, and many of the coins that we look at, we're always trying to get people to understand. Like, look, I do believe in Ethereum. We have obviously, like, we could do a whole other debate on Ethereum. I think Ethereum is going to pass Bitcoin. You said yourself you think it has a good chance to, but for different reasons than I do. But we're always teaching people to flip stuff up into Bitcoin, into Ethereum, into the top coins. The coin number 747. There's a great chance it's not going to make it no matter what it is. And so you want to be putting stuff in, into money that's more solid. Obviously, Bitcoin is the most solid we've had. It will remain so probably for a long time. And that's why, still at the end of the day, that's what we tell people is your best investments in Bitcoin. That's why it needs to be the biggest percentage of your portfolio. And you can use those other coins to gain Bitcoin. From a financial perspective, we try to take people that are not on the financial level that you are, or that I have come to be on. I certainly did not start this journey at any kind of high financial level, and learn how to use those altcoins to level up, to get into Bitcoin. Because right now, for the average person to come in and pay, whatever it is today, $36,687 for one Bitcoin, 99% of people in America don't have that money sitting around to do that. So
they should be buying
you can certainly use altcoins to achieve that goal. If owning more of the Bitcoin network is what you want to do, and I do think that is that's a great argument. I think there's a great validity to that. Then we believe you can do that through altcoins. But ultimately, the end goal there is the same.
Yeah, I would argue that the end goal is not the same. My end goal is to see people hold in the cult. Exactly. Yeah. The Bitcoin cult.
Now look, I do know you said you didn't want to drink Kool-Aid, but I'm just saying, like, you got to keep the Kool-Aid on ice just in case, Craig Wright is Satoshi. So
No. I mean, even if that were the case, it wouldn't matter. Like, again, this is the beautiful thing about Bitcoin. If he wants to be fucking Satoshi, he can be Satoshi. It doesn't fucking matter. Like, that's what makes Bitcoin special. Like, if he turned out to be the founder of Ethereum, then Ethereum will probably fucking crash. That's the big fucking difference, right? Like, so, but anyway, like the end goal for me is to see a new natural competent elite emerge, who can store the product of their labor in something like Bitcoin and not have it confiscated by neither parasites nor the tyranny of the majority, because that's the world that we live in today. The tyranny of the majority, in fact, is one of the most dangerous fucking things that we're suffering from, is this idea that, you know, the competent minority, like the productive, the entrepreneurs, the intelligent people, are paying for all the mistakes of the fucking lemmings and the morons. Like, that the world is completely fucking distorted at the moment. And that's because we've given up private property rights. We've given up all sorts of shit. So anyway, I won't belabor the point anymore. You know, I'm a private property, freedom, Bitcoin, individual sovereignty maximalist. And for me, that is the most important outcome and end goal. Not just to fucking make money, but it's to hopefully, if enough of us get together, we can actually turn the tides on the clown world.
All right, guys, I think that's a perfect place to pause or end this debate. I want to let everyone know, joining us from Twitter, that there's a video component to this, and we are giving away Bitcoin on the YouTube side. Please, everyone, join us. We have about 2 hours, hour and a half left of a show to do. We've got FedWatch with some very special guests. I want to thank Aleks Svetski and Bitboy Crypto for joining me. I hope at the very least you all have a very clear understanding of the differences between these asset classes. I think more discussions should be had between these two, but also in the community at large. I saw a big call for Raoul Paul to come on the show to do a debate next. Definitely a possibility. I think at the very least, we all got some comedic relief out of this, guys. So appreciate you joining us on Spaces. With that, we're gonna close this component out. Please come over to the YouTube side of things, and don't forget to like and subscribe, guys. Thank you.
Thanks for putting it on, guys. Appreciate it.
Yep, absolutely. Pleasure. Before we hop on over to our FedWatch segment, I want to take a moment to tell everyone that you can get, for a limited time, 21% off your Bitcoin 2022 conference tickets, which is a huge discount. You know, this is coming up, I think, about 70 days here. Promo code YTMAG. This is the biggest discount you'll find on your Bitcoin 2022 conference tickets, and that discount is going to go away in a couple days. So please get your tickets tonight. You can come see, Svetski, Saifedean, Michael Saylor, just so many killers in the Bitcoin space speak. You can get to hang out with them. Lots of events, educational opportunities. I know CK just joined us here, but maybe he'll be back to talk about the conference in just a sec before we start FedWatch. And with that, Chris, if you want to play, give us a short break here, and we'll be back to dig into FedWatch. All right, guys. We are live. We are back. Thank you for joining us for that debate. I just wanted to make a quick reminder. Get your Bitcoin 2022 conference tickets today, guys. There's no waiting. This is mandatory attendance. All the Bitcoiners are going to be there, and the broader crypto audience. I'm sure a lot of them will be there as well. So whatever side of that debate you fell on, there's a home for you at the Bitcoin conference, and we're excited to hang out with you there. So 21% off with discount code YTMAG at checkout. Check the link in the description. We're going to be giving away some Bitcoin on screen throughout the rest of the show. I'd like to turn it over to CK now. They've got a very special guest for FedWatch today. CK, what's happening?
Alex, what's up, my man? Great show. I do not know how we're going to follow that up, but I'm really excited to have Jeff Snider joining me and Ansel to talk about WTF is happening with central banks and the dollar and the Fed and prices and assets and all the crazy stuff that's kind of happening around us right now. Jeff is the head of global investment research over at Alhambra Investments. He runs a fantastic channel on YouTube, so check that out, as well as a lot of great content about everything around the Eurodollar, everything around the global monetary system. So this is his third time on the show, and we're excited to dive into all the craziness that's happening into the world. Ansel, Jeff, welcome to the show. I guess, Jeff, let's go to you. How are you doing, my man? Oh, you're muted. Jeff, you're muted.
Can you hear me now?
Yes, sir.
There you go.
Okay. No, I just, thank you guys for having me back. And it's great to see you both again.
Awesome. Well, Jeff, like I said, you are an expert in the global monetary system, and we love to pick your brain and, just kind of get a dose of outside information into our Bitcoin audience. Ansel, you have a lot teed up for us today. Do you want to kind of get the conversation teed up?
Yeah, well, I wanted to take the opportunity to get, when Jeff is on the show, to ask as much as I can, but we're probably going to whittle this down to only a couple topics. But yeah, Jeff, can you briefly explain to people that are new to the show here, because you've been on twice before, and I'm sure a lot of our audience watches your podcast as well, but there are new people out there. So can you briefly explain what the Eurodollar system is and how that might differ from, traditionally what we think of as the Fed-centered system?
No, I can't. Briefly explain it. Come on. No way. No. Yeah, the brief overview explanation is that, look, the monetary system took a detour about 75 years ago, created this Eurodollar system, which is essentially an offshore interbank-centered network of money that isn't really recognizable, at least not in the traditional format, as money. It's essentially money of account or ledger money, where the banks operating in that system get to decide what is money, what is not money, what's, derivatives, repo, all sorts of crazy stuff out there, which makes it essentially impossible to keep track of unless you're some kind of superhuman with incredible insight and insight into the banking system and everything that's going on in it. And because of that, there's obviously enormous implications. Number one is that this Eurodollar offshore monetary system has absorbed the roles of a global reserve currency system that most people have been taught and believe to this day is the US dollar. It's not really true. Especially the liquidity and adjustment functions of a reserve currency have been performed by the Eurodollar ever since the 1950s. The second part of that is, if you have this gross monetary evolution in this offshore banking center system, it makes your job not just difficult, but almost impossible if you're a central bank in a national jurisdiction like the Federal Reserve or even the European Central Bank or any central banks around the world. Because a traditional Walter Badgett style central bank is one that is supposed to provide currency elasticity. But if you're the Fed and you can no longer define what is and what is not money, you can't really define what is not currency. How do you provide elasticity? How do you solve your role as a central bank under that kind of regime? And what happened many, many years ago, we're talking decades ago, is that central banks and central bankers around the world decided, well, we don't need to. We'll kind of change what we do. We'll go into this expectation psychology business because we have no idea what the banks are doing. And so what we'll try to do is influence the behavior, the perceptions, and the sentiment of not just banks that operate in the system, but also the real economic participants, employers, consumers, whatever. If we influence the behavior, and if we do it right, then we won't need to know the dirty monetary details. We don't need to know the nitty gritty of what goes on in the monetary system. We'll leave that up to the banking system. We'll try to influence their behavior in predictable ways, and it'll all work out grand. It'll all work out splendidly. Of course, the problem in 2007, what happens when you have a real monetary problem show up that can't just be fixed with psychological manipulation? The answer is you have a global financial crisis that derailed the entire global economy, the entire global financial system. And it wasn't a one-off derailing. It was a permanent rupture in the way the system works. So 2008, not about subprime mortgages, instead about global dollar shortage in the real reserve currency, which is the Eurodollar. And we're still living with those negative implications to this day, even though we're almost 15 years later. That's the short version. That's the short version.
Yeah, that was great. And diving in deeper into the Eurodollar system, I mean, you said here influence and behavior. Well, one of those ways that they have done that is, well, this isn't the Fed. This is the actual Eurodollar system itself, is Libor, I would say. And so Libor has some recent news out there. They're trying to switch over to SOFR. I guess it's been going on for several years. They've been trying to do this.
Anto, can you briefly unpack those acronyms?
Well, I was going to have Jeff do it. So what is what is Libor, and what's the news going on with SOFR?
Yeah, I'm glad you said it that way, because you absolutely caught the detail here. The overriding thing that we'll get to in a minute. Libor is the London interbank offer rate that showed up in the 1960s concurrent with this rise in the Eurodollar system. So the London interbank offered rate, again, all the things I just said, interbank, monetary system, offshore, it's the Eurodollar rate. So Libor is essentially this offshore real world global reserve currency rate. And it's not just a single rate. There's a bunch of different rates. There's 1 week Libor, there's 1 month Libor, there's 12-month Libor, and there's the big one, which is 3-month Libor. And that has been for many, many years, for decades, it has underpinned and supported the fixed income system globally. So pretty much everything that happens in the banking system, it has some kind of attachment somewhere to 3-month Libor in particular. So it is the London Bank interbank offered rate, or London interbank offered rate, that's representative of what the banks in that monetary system are doing, the keepers of the ledger. What are the risks they're perceiving? What are the conditions they're trading into? What is going on in the monetary system? Libor gives us one real clear window into what that might be. And as you said, the regulators around the world don't really seem to like Libor that much, because they have been on a crusade to get rid of it for not just a couple of years, but over a decade now. Which, I mean, you have to wonder, if it's so bad, if there's something really wrong with it, why is it taking so long to get to this point? And that's really the more complicated story. And it gets back to what I said before. You know, if people don't realize that there's an offshore monetary system, and then that monetary system breaks down and causes all sorts of global havoc in extreme damage in real economic and financial terms, the last thing you want to do is have people start connecting these dots, right? Because that's not the story of the first global financial crisis that anybody's been told. Everybody told us about subprime mortgages and greedy Wall Street bankers, not a global dollar shortage. In this Eurodollar system, nobody's heard about this stuff. So what happened in 2012 and 2011, 2012 was that there was a scandal in the way in which Libor is actually priced on a day-to-day basis. Some bankers were cheating, 1/16 of a point here or there, shaving off a little bit extra here and there, which regulators used and seized upon as an opportunity to get rid of this thorn in their side. So they said this was the crime of the century. This is the worst thing that ever happened. And so we need to sweep Libor away and get into something else entirely. But yet the something else entirely has proved to be itself a thorny issue, because it's very clear what has been proposed over the years isn't actually a realistic or very good alternative to the Libor system, which is one reason why it's taken so long to get to this point. And what they came up with in 2014 was this thing called SOFR, SOFR, which is the secured overnight financing right, which already, if you know anything about Libor, you know anything about this, you can tell these two things are not compatible. Libor is, again, not just the interbank offered rate, but it's what banks are offering to lend each other in this interbank market on an unsecured basis. So basically a handshake interbank short-term loan, whereas the secured overnight financing rate refers to domestic markets, but more than that refers to secured markets. So we're going from an unsecured overnight offshore rate to a secured overnight onshore or domestic rate. And these two things are not exactly the same at all. In fact, they're not really close enough to the same, which is why here we are in 2022 still talking about the Libor transition when it was first raised over a decade ago.
Excellent. Yeah. And the reason why I'm interested in this is because it is, I believe it's kind of a window onto how the system will change. And I think we probably agree that the system has broken. And I think that we're going towards entropy, right? We're going towards the Japanese model of low growth, low inflation, low interest rates for as far as I can see. And to get out of this, something has to change. So I'm always keeping my eye out for what can we look to as an example of how the system will change. And to me, SOFR is kind of a little window into how the system might adapt to other things in the future. Is my thinking off, or is this a great way to observe this?
Yeah, I don't think I would use SOFR quite like that. I think it's another, what the regulators have essentially done is for very, very different reasons, they've introduced another form of uncertainty. And uncertainty is the last thing we need. What we really need to happen to have any sort of monetary expansion to avoid the Japanese scenario that you pointed out, Ansel, is you know, the one that we've been following for the last 15 years. To get out of that, we need certainty, we need predictability, we need volatility to go away. And this is not the way to do it. But again, the SOFR episode to me illustrates how policymakers don't really understand this system that they're in. They essentially had a knee-jerk reaction to what Libor presented to the world in the first global financial crisis, which was, these are not central banks. These people don't know what they're doing. If you followed Libor throughout the 2007-2008 crisis, what you found was that it wasn't working. Nothing the Fed did actually had any impact because Libor rates stayed high throughout the entire crisis, from August 9th, 2007, all the way through the end. So if anybody paid attention, fortunately for central bankers, not many people really paid close enough attention, but for anybody who did, and anybody who wants to go back in history and look at what actually happened, Libor was completely embarrassed them, exposed everything that was wrong with the system. And so essentially they've tried to shut it down and shoehorn this SOFR thing into it, which has just introduced more uncertainty because SOFR is completely inappropriate as a Libor replacement, which is why the banking system has resisted. So I look at SOFR more along the lines of, what are policymakers doing wrong, and what effects might that be having on not just today, but what would that might do for future considerations or future factors, including, like I said at the beginning, uncertainty. We've introduced now in the core of the global fixed income markets an uncertain. We don't know how SOFR is going to actually take over from 3-month Libor that has a more than 50-year track record. We know how Libor responds in all sorts of conditions. We have no idea how SOFR responds. And oh, by the way, when you get into things like term SOFR and bootstrapping of various risks embedded in these rates, SOFR does not behave like Libor does. At least it hasn't up to this point. So, like I said, this is an unforced error, in my opinion, that creates more uncertainty that's likely to depress future conditions. Because think about it. You're a bank operating in the Eurodollar market that hasn't worked very well at all. And now you have to worry about whether or not SOFR is going to accurately price risks if something starts to go wrong in the future. That's just, I mean, that's pro-cyclical. That's not anti-cyclical. So it's another one of those things like Dodd-Frank or anything else that just adds more to what's already been depressing the system.
Man, don't you wish we had an alternative that was sound and transparent? But
what could that possibly be?
Well, I have a follow-up for that.
Chris, I think that's exactly why I love the idea behind crypto. I love the technology. I love the potential for exactly these reasons, because you're right. The problem with the system from the very beginning, we're going back to the 1950s, is that it's been a ledger system kept by a very narrow group of people, these interbanks the banks that operate in this interbank market across the world, and they don't let anybody know what's going on. It's completely opaque. First of all, nobody knows it's there, but even those of us who have studied it for a very long time, we don't really know what goes on in the system. So it's completely opaque. We can't see into it. It's just a total complete mess. which makes it more difficult to pin down what's going wrong, as well as what can we get to start going right.
So how are banks responding to this uncertainty? I've heard you speak recently on your podcast a little bit about this, that they are forming some other reference rates that they're using, some private reference rates. You know, how have they responded to this?
Well, specifically LIBOR. What happened was at the end of last year, regulators in the United States in particular said, look, if you're a bank and you originate new loans with LIBOR, you're not forbidden from doing that. But if you do, we're going to come down hard on you. We're going to take the regulatory scrutiny up to 11. We're going to make life very hard for you if you originate any loans with LIBOR. So at the end of last year, bankers were busy, lawyers were busy, trying to get as many LIBOR loans originated as they possibly could before the end of the year deadline. Now that we're on the other side of it, the market has sort of transitioned into a bunch of different things, because as much as the regulators have tried to force SOFR down their throat, again, it's not an appropriate rate. It doesn't give us the same information 3-month LIBOR does in particular. So banks have resisted. And so it's no longer just, hey, SOFR is going to replace LIBOR. It's a whole bunch of different things that are right now actually being used. One of them is called BSBY. It's a rate that Bloomberg has come up with that does have some of the features that 3-month LIBOR does. In fact, I think it's intended to. I don't necessarily believe LIBOR is going to go away. As of right now, some of the LIBOR tenors, especially 3-month LIBOR, 12-month LIBOR, those 6-month LIBOR, the big ones, they're still going to be priced by the Intercontinental Exchange going into June of next year. So there's a lot of uncertainty about LIBOR SOFR transition, as well as, hey, maybe LIBOR sticks around a lot longer than people think. And it's not really, hey, this is an easy, clean transition from one to the next. It's sort of just nothing has really emerged as a good enough alternative to LIBOR that it's really a period of experimentation.
Excellent. Christian, you want to go on to the next question?
Yeah. So Jeff, we've talked a lot, you first, Ansel and I on this show, but every single time you've joined, about the Fed and other central banks don't really have the dials and tools that they say they have or they think they have. And really a lot of it is about setting up expectations. We saw that really play out with Jerome Powell and the Fed really kind of taking a pivot. I'm curious, what's your take on, the last, let's just call it 6 weeks, and how that has played out with the expectation management from the Fed?
Yeah, since they prioritize expectations, their first position early last year with CPI starting to accelerate was that it was transitory inflation, which I agree with. I think that's exactly what's happened. The classic supply shock, prices went through the roof because we tried to squeeze 2 years worth of goods through 1 year worth of supply conditions. But then, the CPIs didn't, what does transitory actually mean? Transitory actually means different things to different people. And I think it's understandable why people, members of the public and lay people would say, is a year transitory? It doesn't seem like it. So what happened was, as CPIs continued to be high throughout last year, the Federal Reserve started to worry that these high rates of CPI were going to start to filter into especially consumer expectations, but also business expectations too. That if we start to expect and normalize the high CPI rates, then we start to expect inflation. Therefore, we'll start to act in an inflationary manner. It's the self-fulfilling prophecy that the Fed has actually been after ever since the first QE going back to 2008. So the idea was, okay, yes, it's transitory, but it's sticking around. Maybe the consumers acclimatize to high rates of CPI, and that begins to start to affect their behavior. And since we all about behavior, not money, then we have to adjust our policy. And that's really the point here, because inflation, real inflation, is a monetary phenomenon. So it really should be very simple. If you're a central bank, just look, is there too much money or is there not too much money? It really should be that simple. Have we created too much money or have we not? But that's not what the Fed does. The Fed goes through this expectations game. And what they're saying is that at first we thought this was transitory, but now we're worried it's going to influence expectations negatively. So we need to adjust our policy. So as far as the Fed goes, they have absolutely shifted into a hawkish direction because they're concerned about consumers and businesses becoming normalized to high rates of inflation, when that's not how inflation works.
So I guess let's tease this out a little bit more. I mean, was this a policy error? I guess, like, can you talk a little bit about why they're behaving this way right now, beyond the fact that they're just reacting to expectations?
Well, if you don't do actual money, right? I mean, again, inflation should be simple. Is there too much money or is there not too much money? And if you can't do that, then you have to go through some other backwards, reverse engineering process to try to figure out the future. Because, inflation is essentially a future property. So if we're looking at what we expect consumer prices to do in 2022, for example, and you don't have a window into the monetary system, that's what you essentially have to piece together a bunch of psychological tools and quantitative econometrics to try to figure out, is this going to be inflationary or not? We can't really look at the monetary aspect of it because we don't. So what they're essentially doing is trying to read the tea leaves and the astrology and look at all of their astrological charts and decide whether or not these expectations are going to be something meaningful. And they've come to the conclusion that the dangers in their theory, in their worldview, the dangers are too high. Therefore, they need to start shutting down QE, tapering it off, and getting into the rate hike regime. Essentially replaying what we did just 3 years ago. And where it starts to become a little bit sticky or a little bit thorny again is that nobody's buying it. I mean, outside the financial media, outside the mainstream commentary, you look at the actual money markets, this interbank Eurodollar system, nobody's buying the inflation. Literally nobody's buying the inflation. The yield curve is flattened. The Eurodollar futures curve is inverted, which is the market rejecting the whole hypothesis behind taper. And the market's saying, we've looked at the monetary system. Guess what? There isn't too much money. There's, in fact, we're in danger of again going into a situation where we have too little money. So it's not so much a policy error as it is the justification rationale behind taper and rate hikes being rejected outright by the marketplace, the money system itself, because it was a temporary supply shock. And the temporary factors that created consumer price, really substantial consumer price acceleration last year, we're already seeing the downside of those hit across the world. So it may be just a matter of time before the Fed is exposed as this expectations rather than monetary policy.
Yeah, you and Emil have talked about this on your show. I think Emil brought it up, was that perhaps this was to give them room. They had to come off of QE at full blast, right? Imagine if they were doing 120 a month with rates at 0, and then all of a sudden they had a downturn in the economy. Where are they going to go from there? So I think Emil brought it up that maybe this was to give themselves room to now be dovish again. So now they can say, oh, well, we're going to hold off on raising rates. That would be a huge, like if they come up
now
tomorrow,
you're thinking like a central banker.
Yeah,
that's how they think. It really is. It's odd. It's weird, but that's exactly what they're thinking. If, hey, if there is some downside risk to the economy, we're still on full blast QE. How can we, it's not whether they're adding money to the system. It's whether they're shocking the system in one way or another. So if you think that inflation is going to be a problem, and you're doing this non-money monetary policy, you have to have a hawkish shock, which is, I'm going to taper, I'm going to go rate hikes, and I'm going to do it fast and quick. But if things go the other way and you're still doing QE, you have no room for a shock. And the fact this was Ben Bernanke's biggest complaint about the 2007-2008 crisis was, once they got down to the zero lower bound, he had no more ammunition. And what you really should say, well, wait a minute, can't you just print money? Well, no. Monetary policy is all about, can I get people to believe I'm being helpful, which means I need to send a helpful signal, which is cutting rates. And if you're already at 0, or Jay Powell, you're already doing 120 billion a month in QE, you can't send a powerful and accommodative signal because you're already accommodative and you're on your own terms. So yeah, they're in a rush to get done with QE and get into rate hikes so that if there is any downside risk, which probably they don't think will materialize until 2020, the end of this year, maybe into next year, they got to give themselves some room to, at least, you got to have rate hikes. You got to push rates up so that you can cut them again, right? You got to end QE so that you can reintroduce QE at some future point. And that in a nutshell is monetary policy. It has no money in it. It's all about manipulating psychological emotions.
Yeah, that's what I was going to ask you next, is where do you think they're going this year? But I don't know. I think that tomorrow, because they have a FOMC meeting right now, correct? Today and tomorrow, and they're going to be talking tomorrow, or the press conferences tomorrow. So perhaps they have a dovish surprise and say they're going to push out the rate hikes until the end of the year. I think that could boost markets. I mean, it wouldn't even be technically dovish. They're still talking about rate hikes, but they're being able to push it out, so it looks dovish. I don't know. What do you think for the rest of the year?
Yeah, there is this sort of impulse to do a short-term fine-tuning, which to me is ridiculous. I mean, you're already off into the into Netherland anyway, and so now you want to fine-tune short-run fluctuations, which it's impossible. But yeah, I think that when we stop and look at it from the big picture perspective of how last year actually played out versus how it's said to have played out, when you have rising uncertainty, rising deflationary pressure, especially through the last part of the year, you can understand why, first they turned hawkish and now they're a little bit uncertain. And now they're worried that if we actually do something different, how is that going to affect emotions in the real economy and the real financial markets? All sorts of things that they're looking at, which have nothing to do with the monetary system itself. It's all about manipulating emotions. So the Fed could do anything tomorrow. The question is whether or not it actually matters. And that's where we get into the market reaction. Now, I'm not talking about stocks. I'm talking about the actual market, which is not just US treasuries, but all sorts of fixed income instruments, including Eurodollar futures, this offshore monetary system, which tells us that, maybe it doesn't really matter what the Fed does tomorrow, because we've been rejecting this premise for 9 months already. We've seen growth and inflation expectations be marked down, not up. And it may be, the Fed's just going to hike, not hike, whatever. It's already baked into the cake at this point, which is, again, repeating the 2018 scenario when the Fed grew especially hawkish in 2018. The market, it rejected that, the entire thesis, and rejected that whole scenario. And oh, by the way, the market was absolutely correct, because 2019 wasn't filled with inflation and rate hikes. It was filled with deflation and rate cuts. So we're kind of getting that same sort of weird queer feeling where something's not right here.
All right, and I want to take advantage of having you on the show, so I want to cover a lot of ground here on the you talk a lot about the yield curve, and I think your account is one of the criminally unfollowed Twitter accounts, because you do put out all your charts and you talk about the yield curve quite a bit, and that's one of the I guess parts of the system that can give us so much information that people don't understand. Now, on a recent episode, you talked about that the yield curve is closer to Japan than to takeoff. Can you elaborate on that?
Yeah, well, the yield curve, you're right, Ansel, because I mean, most people, what they know of the yield curve is if it inverts, it's some kind of recession signal. Although outside of an inversion, we pay no attention to it. And not only that, people have the wrong perception of interest rates entirely. I think we talked about this before in your show, the interest rate fallacy. We're taught and we're led to believe that low interest rates are a good thing. They're a sign of stimulus. And so if interest rates are low, we should be positive, when history shows that low interest rates are always associated with tight money deflationary conditions, including Japan, but also the United States in the Great Depression, which nobody would associate with an inflationary period. So if we have a yield curve that's flat by itself doesn't necessarily tell you anything. It doesn't mean anything bad, because in a normal period, such as the 1990s in the United States, we would expect the Treasury curve to be flat. It's not supposed to be steep. It's not supposed to be inverted. It's supposed to be relatively somewhat upward sloping, but not all that much. But if it's upward sloping and flat at a rate close to zero, at a nominal level close to zero, that tells you something's very wrong. So what we would expect to see, if things are going from very wrong, which means low nominal levels, to something better than very wrong or even normal, we would expect the yield curve to first steepen way out, nominal rates, especially to longer end, rise much more rapidly than those at the short end. And that would tell us, okay, maybe there's a regime change. Maybe we're getting away from this Japan deflationary scenario into something better. And that started to be the case early last year, late 2020 and early 2021, particularly January and February of 2021, when the yield curve did steepen out. And so the yield curve told us at that time, essentially, because it was low still and not really transitioning all that much, but it was transitioning, that the market was becoming a little bit more optimistic, if only relative to 2020, which is not a very high standard for comparison. But it never really progressed much more than that. The yield curve always stayed low and flat, even though it had steepened out. Now, ever since March of last year, it has remained essentially that way, but it has flattened even more because now we have the Fed coming in with its rate hikes expected for this year, which has had the effect of boosting short-term interest rates without boosting long-term interest rates. Now we have a flattening yield curve at an incredibly low level that never really got outside the Japanese range, for lack of a better term, which means that the yield curve is telling us not inflation, more deflationary risks. So you're doing yourself a very big disservice by ignoring the yield curve at all times in all sorts of conditions, because as you said, there is a wealth of information that tells us about not just the real economy, but the actual monetary system itself. This is, who's trading treasuries, who's trading German bonds, who's doing the trading in Eurodollar futures. It's those banks that keep the ledger in the monetary system. So they're giving us a great amount of information and how these curves move and shift through time for us to tell, what's really happening here. We don't have to depend upon the FOMC or the financial media or Jay Powell, because they always get it wrong. We don't need to rely on them. We can just look at the curves and be relatively assured that we have a good idea of what's happening, what's really happening.
I mean, Jeff, if you could describe in the most succinctly and dumbed down way on what you think is really happening, I feel like that could be really helpful, just because right now a lot of people think Weimar Germany inflation is really happening. And, I think the show, we've challenged that a lot, but you have been a huge challenger of that thinking since way before coronavirus. I remember listening to you doing a Eurodollar, just smash course, and that was in 2019, 2018. So you've been talking about this since before the pandemic was to blame.
Yeah, and it starts with, it's understandable why people have this impression, right? Because everywhere you see Fed, bank reserves going through the roof. We got trillions. They call it money printing. They call it pouring trillions of dollars into the real economy. But nobody stops and thinks from the very start, what are they actually doing? What is the Fed actually doing? They're creating bank reserves, which, okay, bank reserves sounds like money, but is it actually money? When you actually stop and think about it and analyze what bank reserves are, you realize they don't really have a place in the actual effective global monetary system. It's sort of just, as we talked about before, a way or method for central banks to signal they're doing something. Just don't think about what they're doing. Just accept the Fed is printing money, even though the Fed, if you held the gun to Jay Powell's head, he would tell you, no, we don't actually print money. We just create bank reserves. So that's where it starts. I mean, you can see the Fed's balance sheet rising. You can see the level of bank reserves going through the roof, and you think, Weimar Germany, it has to be, right? What else could it possibly be? But what I say and what I tell people is, look, you have to look at the overall monetary picture globally. Bank reserves don't really have a place in it, but even something like M2 has gone through the roof. You have to understand that M2 was obsolete decades ago. It doesn't give you a comprehensive view of the monetary system either. I'll give you a perfect example. M2 skyrocketed during September and October 2008. The worst monetary panic in 4 generations, and M2 was going through the roof. And the reason it was because we had this massive contraction in the money you didn't see out in the shadow system that forced a lot of banks to kind of go traditional. So they created checking deposit accounts to offset what was very real monetary destruction in things like repo and derivatives and all sorts of things outside. So it's not what you can see, it's what you can't see. And what you can't see is often, and actually always is, far more important. So in terms of money, in terms of inflation, in terms of Weimar Germany, it doesn't matter what the Fed's doing. It's what the actual monetary system is doing. So how do we know what's going on in the monetary system? As we just went through, yield curves, money curves, things like that. And all the money curves and yield curves have been telling us consistently throughout the last couple of years, no money printing, more deflationary than inflationary potential. And over the last couple of weeks, going back to October, really, so the last couple of months, the market has become even more resolute about deflationary potential rising into this year, not inflationary potential, which is kind of weird because everybody says inflation, 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 yet we have these massive markets, deep, sophisticated markets saying the exact opposite, which is, by the way, I mean, that's the vast majority of, that's the consensus opinion is deflation, not inflation.
So why are prices going up in terms of what consumers are feeling?
Simple supply and demand dynamics, right? We had Uncle Sam come in the early part of last year with tremendous doses of helicopter funds that created a one-time impact, which is basically what everybody expected. We had a supply was sticky, supply was inelastic. And you have this tremendous onrush of demand, which simple supply and demand curve, small e economics. If demand shifts to the right and supply is inelastic, prices have to adjust. And that makes sense. I mean, everybody started shopping on Amazon all at once, which the demand for that could not be met at any point. And then you have all these logistical problems that have just created more frictions on the supply side, which contributes even further to consumer price acceleration. But that's not inflation. That's a supply shock. And we have seen these historically throughout, not just the United States, but also all around the world. It's simple supply and demand economics. It's not money. It's something very different. So if we don't have the money for actual inflation, then even though it's a tremendous supply shock, even though it has its far-reaching and widespread impacts, we don't expect it to last because it can't. It's not a monetary phenomenon. It's something else entirely. The problem is when you say transitory, people expect that to be a couple days. Okay, it's been a month. Why isn't it changing? In economic times, especially macroeconomic terms, what are we 9 months into it? It's still I mean, that's nothing. That's still the short run. Now, I have to say, it is incredibly painful. This is very hard for people to absorb. I'm not saying that this is not a problem. I'm just saying it's not a monetary problem.
No, I think that you explained that extremely, extremely clearly, and I appreciate you kind of simplifying it out there for those who aren't as astute in kind of understanding, what yield curves are doing or M2 or anything like that. I want to, I think some areas that we really agree is, what's happening right now is an absolute mess, right? And I think Ansel and we believe that we found a solution in Bitcoin. And I think that you are not quite convinced. So I'm kind of curious, this is your third time on the show. We've all witnessed, a lot of our theses kind of playing out, a lot of surprises as well. But has your position on Bitcoin specifically changed? And I guess what's kind of your take on where the crypto market is playing, or what its role is in being a part of the global monetary system in the future?
Well, let's start with crypto sort of in general, because I think there's a couple different things going on. And I think that's also leading to a lot of confusion and a lot of maybe malinvestment, to use an Austrian term too, because again, most people have the perception, as you just laid out, Christian, that money printer go burr. We need to protect ourselves from inflation. The Fed has destroyed the dollar, and Uncle Sam has contributed to it. Therefore, I think most people, I don't want to use the term unsophisticated, but I think most of the public who have been piling into crypto have been doing so, thinking that they're going to use Bitcoin or Ethereum or whatever as a store of value protection against the dollar going to zero. And I think that's the big mistake that they're making, is that they're looking at crypto as sort of a store of value mechanism, or sort of even a portfolio asset. I was on a podcast not too long ago, and somebody asked me, do you see crypto assets being a part of people's portfolios? And I said to him, that's the wrong way to think about this. If crypto is actually going to be money, it's not part of your portfolio. It's what you take to the grocery store with you to buy groceries. It's actual money. So to me, I think most people are looking at crypto as store of value, when I think its real potential is more along the lines of medium of exchange, unit of account, the real monetary nitty-gritty. So where the Eurodollar system today is all about medium of exchange and unit of account, and as we have said, that's been malfunctioning for 15 years, it has opened the door for competing currencies, not as a store of value, but as a true medium of exchange. But I don't think that's why most people are buying cryptocurrencies, certainly right now, in the most recent craze. I think they're buying it because they've been told money printer go burr, got to protect yourself from the dollar's collapse. And I think what we're seeing over the ever since, again, October, with crypto weakness, Bitcoin falling in price, going below $40,000, that's the downside, where we're starting to realize maybe we don't need Bitcoin because the dollar isn't going to crash, inflation isn't going to be a permanent phenomenon. And so we're left with this, again, perilous situation where most people have gotten their taste of crypto from store of value, when they should be looking ahead as its potential medium of exchange. And that's, to me, where the real value lies, is that it's not about today, it's about down the road, when some of these, maybe Bitcoin, maybe one of the others, who knows, actually performs the role of medium of exchange and unit of account in some substantial manner, that it becomes a realistic alternative to the system that we have. That's the dream, that's the hope. But I think it's still a long way down the road, because to replicate what the Eurodollar system has been able to do over the last 70 years, that's a tall order, and it's not something you can just do overnight, obviously. And I don't think that anybody in digital currencies, or just decentralized finance in particular, are looking to do it overnight. I just think that there was a rush into cryptos and digitals for the wrong reasons, when the real potential is not store of value, it's medium of exchange.
Yeah, I think the inflation narrative is actually pretty dangerous, because what happens when the inevitable credit crunch happens and we have deflation, and we can't get rid of this deflationary pressure. Gold bugs have been facing this for 2, 3, 4 decades, where they say the sky is going to fall and we're going to have hyperinflation, and it never comes. So then what happened? Bitcoin came up as like an alternative to that, and people are just moving that same narrative right onto Bitcoin and not learning any lessons. So I think that is very dangerous. One reason why I liked this SOFR conversation that we had earlier was because it's somewhat watching the system change, and it has taken so many years, decade or more, to watch this simple little, well, it's not simple, it's a very important thing, but to watch this one thing change in the Eurodollar system and how long that's taken. So yeah, I think Bitcoin is going to take a very long time. But I think the argument is that for being in your portfolio is that, it's a process. So a good has to become monetized and has to become liquid. And how do you do that? Well, it has to be owned by more people. So that's kind of the argument there. Any pushback on that?
No, I agree. I think that's exactly right. It's not just owned and it's not possessed. It's got to be used. It's got to be used in actual transaction. It's got to be used in financial transactions. It's got to be used more in real economy transactions. It's got to be a regular part. Like I said, it's not part of your portfolio. It's part of your life. That's where money actually is. It's not like, oh, do I need to invest in Bitcoin? It's, do I have enough Bitcoin to buy groceries today? That's really the conversation that I think when we get to that part, that's where we know that cryptocurrencies are becoming actual currencies, useful currencies, when they become medium of exchange. I think that's the opportunity. That's the door that's been opened by the Eurodollar's dysfunction, is this medium of exchange, elasticity, the elasticity opportunity. And that's, to me, that's the thing I worry about with Bitcoin. Is it elastic enough to really match in a very clever, insightful way, in a very elegant way, the demand for money with the supply of money? Because that's really what you want from any monetary system, is to be able to efficiently and effectively match supply and demand for money without getting too excessive in either direction. That's really what elasticity means. We don't want to have too much, then you go into inflation, you can potentially worse. You don't want to have too little, because too little historically historically speaking, has shown to be the worst of the worst case. When you have deflationary money, that's bad too. You want to hit that sweet spot, which is some form of elasticity, widespread use in actual transactions, not just a part of people's portfolio, not just speculating on whatever meme coins is hot today, but use it. Use the thing in your daily life. And as you said, Ansel, I think we're a long way from that right now, but that is the potential. And I think when we look at digital currencies on the whole, they are moving in the right direction, albeit slowly. The problem is this mistiming, and what you said earlier, that there is the danger there, that people that maybe they get burned with Bitcoin this time around because they've been thinking about it as store of value. They say, screw it, I hate cryptocurrencies, they're dangerous, and I got burned by it.
Yeah,
That's
you know
really
what's hilarious about that is that so many Bitcoiners back in 2013 through 2016 got absolutely burned based on the medium of exchange narrative. And really, it was the ones who were pushing on the store of value narrative who had the right narrative up until this point, which is kind of funny that you're really pushing back on a very strong narrative within Bitcoin, which is this idea of like store of value, then medium of exchange, then unit of account. I want to hit you with a theory that we've been pushing on FedWatch, which is this idea of, first, it's hyperdollarization, followed by hyperbitcoinization. And really we kind of see the dollar destroying all other fiats, which we're kind of seeing already. And we already have this Eurodollar system, and we're seeing the dollar evolve with Tether and other stable coins. And we see Europe getting nervous about stable coins, and how they're starting to compete against the euro directly. What's your kind of take on this idea of hyperdollarization, and when it's just a dollar and maybe a much bigger Bitcoin, does that kind of change the equation on how the world works? Because I would say that, again, our theory is that Bitcoin is this separate economy that is kind of being built adjacent to the existing economy, and at some point it gets big enough where it can actually support what you're talking about. But right now it's still in its rudimentary stages.
Yeah, and I think that's the point, right? You want to create essentially a parallel structure that at some point can stand on its own two legs and actually compete, not just compete, but compete very well. And so maybe not strictly Bitcoin, but other forms of digital currencies can accomplish the same thing. I think that's really what they're attempting to do, right? Is to create parallel spaces that offer much better terms and much better opportunities, much more effective and elegant solutions to the problems that we face today, that you can see in real time. They're working. It's not just, we're not writing a bunch of white papers here. It's actually formed its own ecosystem. It's self-contained ecosystem that doesn't need any input from the outside. That's I think the point where we're going toward. I think that's the point everybody's working toward. The question is it actually feasible in its current arrangement? And that's where I kind of get into some of my doubts about the system. I don't know if Bitcoin can achieve that form of self-contained, you want to call it hyperdollarization or hyper Bitcoin or whatever you want to say. I think that's what we're working toward. That's the right way to do it. But it just there's a lot of challenges there that I don't think many people think about and appreciate in all of the, as the point Ansel was just making. The reason why the Eurodollar system has lasted for 15 years is because there is no realistic alternative to it. And I think there's a lack of appreciation for what reserve currencies actually do. And more than that, how they do that. What does it really take to be a reserve currency? How do we get this currency available and useful in every part of the world so that it can mediate and intermediate and translate very different terms? Theoretically speaking, yes, cryptocurrencies are maybe the perfect solution to do that, but as they say, there's a lot of devils in the details, a lot of details to be deviled.
Well, I'll tell you this, as long as you keep saying cryptocurrencies and not Bitcoin specifically, I don't think we're talking about the same alternative system. But I want to pass it back to Ansel. I know you want to wrap it up, but Jeff, in general, we greatly appreciate your opinion, and you're probably the guest that's been on this show the most. So we think that you bring a lot of alpha to the audience, and I know the chat on YouTube was very pleased with the education that you gave everyone.
My pleasure. Like I said, hey, I love Bitcoin. I love the idea. I don't want to come across as like I'm trying to bash Bitcoin, because I'm not in any way. In fact, I would love to be proven wrong. I would love for Bitcoin to overcome every single one of my doubts. I would love for the future where we live on a Bitcoin standard. I think that would be tremendous. It's a little bit of there's quite a lot of questions, quite a lot of hurdles to overcome between here and there.
Yeah, I think it's good to question our assumptions. So I've been doing a lot of that. When I remember being introduced to your stuff back on Macro Voices probably 4 or 5 years ago, and I'm like cursing at my headphones like, this is wrong, I can't believe he's saying this. And now I'm like not completely converted, but I think the Eurodollar system has it much more right than the gold bugs ever had it. So yeah, thank you for coming on the show. We'll have to have you on again, maybe 6 months time, and you can give us an update on the yield curves and all that. So yeah, appreciate it.
Jeff, where can people learn more about you?
Yeah, like you said, I think you mentioned before, I do a podcast with Emil Kalinowski. It's called Eurodollar University. You can find it on YouTube or any of the other, Apple iTunes or any other podcast outlets. I produce a bunch of material. It's published in written form at Real Clear Markets. I do a weekly column there, as well as my company's website, alhambrapartners.com.
All right, awesome. Jeff, really, really appreciate you coming on again. And yeah, this podcast is coming out tomorrow. All these videos will be live on YouTube, so feel free to share them with your audience. And again, really appreciate the insights. And with that, make sure to follow me and Ansel on Twitter, myself at CK_snarks, Ansel at Ansel Lindner. And yeah, check out Bitcoin Magazine. We're putting out the best information in the macro and Bitcoin space. Peace.
Welcome. Oh, well, I'll let you go, Alex. You're gonna do an
Oh,
intro.
hey.
I saw you on my screen.
I wasn't quick enough with my unmute button. Just before we get started here, I just want to thank everybody. We've got a much bigger audience than usual from our debate this morning. Don't forget to like and subscribe, guys. We've got more debates lined up. We're in talks with Raul Paul and a couple other notorious kind of crypto people to get at the heart of things, as we must do time and time again for the new people. So should be a fun next couple of weeks. We've got Anthony Scaramucci, we've got Michael Saylor, we've got some heavy hitters coming on as well. Before we transition to Nolan's awesome breakup segment, I just want to remind you that this is one of the last days you can get 21% off your Bitcoin 2022 conference ticket. So if you have not yet bought your tickets, please do so today, tonight, while you can get such a fat discount on the price. The promo code for that 21% discount on Bitcoin 2022 conference tickets is YTMAG. Check the description in the video for a link. And yeah, make sure you use promo code YTMAG at checkout for the biggest discount out there. Again, this is one of the last few days we'll have it, so get your tickets tonight. And with that, I'd like to pass it off to Nolan.
Thanks, Alex. Yeah, I thought the debate had a lot of good energy. I like the free flow of ideas. And I think, as far as a debate, it's not every day you get a debate where the punches are landing on each side and it's kind of, a couple of haymakers. And that's fun, right? We want to see a fight, right? We don't want to see get along gang, right? We want to see some tension because things are changing. Things are changing. So we've got to monitor that. So today's show, we call this the breakup. It's really the psychological engines. We treat economics like a psychology engine. It's not math. We're not adding things up. We're not dividing. We're not coming up with an answer that's a number that you're going with, and you win the debate if it's Austrian school versus modern monetary theory or Keynesian stuff. It's none of that stuff. It's the psychology that goes into the decisions we make every single day and what's behind those decisions. And the simulation, I'm a big simulation theory guy, so you're going to hear the simulation a lot on this show. We take that frame of the breakup because, we've got this new world ahead of us and before us because of what we're learning. And there's parts we got to let go. And today I saw a really neat case, which was the simulation delivered us this great two Canadians related to Joe Rogan, right? You've got Jordan Peterson, who is sort of new in the Bitcoin community, but making a lot of waves and bringing all that horsepower to what's going on around Bitcoin. So of course, it's a fresh voice and a fresh idea. And we're all looking forward to the hyped up appearance yesterday on Joe Rogan, because we think we're going to get one of the largest audiences Bitcoin has ever had. Yet on the same day, singer Neil Young, another Canadian, decided that he would give an ultimatum to Spotify. So yesterday, Neil Young said to Spotify that hosts the Joe Rogan podcast, it's either Neil or Joe. You can't have both. And I looked at the situation. That's fair enough. Of course, Neil Young can make decisions. But I thought about it for a second. I said, well, it doesn't really affect me, right? And I remembered that song, Sweet Home Alabama. And I said, well, I heard Mr. Young sing about us. I heard O'Neill put us down. But I hope Neil Young will remember that I can listen to him off Spotify anyhow. I don't need Spotify. I can go on YouTube. I can go anywhere to listen to this guy. So it makes no difference to me. The only person who loses here is Spotify, right? They're the only one that can actually lose. Doesn't make a difference to Neil Young. Joe Rogan doesn't care. I mean, he's going to win this. Of course, he's the most popular podcaster on earth. Neil Young with his couple of tunes he wrote back in the 60s and 70s, as good as they were, right? I'm not going to stop listening to him. I thought those songs were great. I don't care if he disagrees with me on anything. Like, the songs were really fun. So I'm a fan of Neil Young. I'm not going to change. I'm not going to stop being a fan. However, I took it kind of personally that he would insult someone that I think is a pretty good reference. He's as wrong as anyone else, Joe Rogan, right? He's trying it out. Good ideas, one of the best interviewers in the game, of course, but we've all got to use our own discretion, and he's not right about everything, but certainly he's doesn't need to be, you know, strong-armed by a guy like Neil Young. But when I thought of that situation, and today's lesson is all about negotiation power, because that's what it made me think of. I looked at who the loser is here, and it has to be Spotify, right? That's what I'm pretty sure it's Spotify. And then I said to myself, well, let's look at the state when it comes to negotiating power with people, and let's interject Bitcoin into the conversation as well, and find out where the state's negotiating power is with us today, and how we can maybe turn that a little bit. So I took these negotiating power sources, they're called, from a lot of negotiation guidelines for negotiating your salary, and there's a lot of these matrices out there. There's a few others that I left out that you'll see in a lot of this literature, you know, how to negotiate. You'll often see like nepotism or certain degrees and things like that. I kind of kept that out of this matrix just to simplify, because it just is not that relevant. You know, it's pretty obvious. It doesn't make a difference. So I tried to bring a few of these sources of negotiating power from these matrices and bring them forward and see what's going on. So when we look at negotiating power of the state, so my contrast here is with the state, the modern nation state, with tax collecting and services being given, roads and hospitals and all the things they do, healthcare in this case, right? In a lot of countries, it's healthcare. In the United States, not as much, but it's still a huge matter of public policy, of course, right? We can say we don't have state-supported healthcare or universal healthcare or whatever that is in the United States, but there's certainly a policy role. We can't deny that. So I looked at these sources of negotiating power, and the two parties in this combination are the state and people. And the two sort of psychological engine pieces are, of course, before Bitcoin and after Bitcoin. So in the case of information, what leverage did the state have on people before Bitcoin? Well, with the Bank Secrecy Act, of course, they could find out how much you made, how much money you were sending to people. There's all these aspects of deputizing the banking system in order to do a lot of law enforcement jobs. We've seen that as a fair compromise for a little while. It sort of came from the Al Capone time, and we realized that you could deputize financial services and that infrastructure and get results. I think everyone was behind it at the Al Capone time, and the Untouchables and Elliot Ness and all that stuff. But of course, it went to an extreme when the Bank Secrecy Act came out. Of course, Bitcoin removes that negotiating lever, right? That's always been a big piece of what's going on here, is that the Bank Secrecy Act and the ability to monitor transactions and tie them to names and put them on the SWIFT network, and Operation Choke Point, right, which was a financial strangulation of political opponents in the previous, well, 2 administrations ago in the United States, a really big issue, actually. And so we've seen now that this source of power, information, is not really a credible one anymore with government. So we can almost say that after Bitcoin and going forward, it's probably lost. It's at least lost in the eyes of a lot of people who see the world in this Bitcoin lens, that have this economic engine that is motivated by Bitcoin. Expertise, right? When you have expertise in something, you can certainly negotiate a higher salary or more payment. When it's the state, they were responsible for a lot of institutions that would provide that expertise, right? And certainly as Bitcoiners, we've been paying attention to central bankers and the fluff and the choice of language, and really the lack of expertise. I guess complexity theater has been one of the common complaints. Now, when you look at what's going on with COVID, the reputation of experts appointed from a government is at an all-time low. Fauci was a good cop, bad cop type of thing. He had to be the bad cop. I understand why a lot of people had a problem with him. And he had a lot of bad news, but things have gone pretty far. I doubt anyone has an appetite collectively to see him in another leadership position in government. And I'd say there are a lot of people who fall into that category after COVID, that you just don't want to go to those resources and institutions for the expertise that comes with it because of that loss of negotiating power. So I'd say Bitcoin opened a lot of people's eyes, but that has been driven even wider now. It's far beyond Bitcoin. There's an all-time low amount of credibility of the experts. And we're sitting around with COVID, for example, doing our own research. It's not a good look. We're not good at it, right? I don't like doing my own research. I don't want to research vaccines. What the hell do I know about any of this stuff? How could I possibly research a vaccine? I have no clue. I'm pretty smart. I'm not an idiot. I can't research vaccines and understand my risk versus COVID. They're all dangerous. I'm sure everyone's making decisions out of fear. It's not a good look. It's not good for us. We had to do it. We did pretty good, actually, using Twitter and all the resources. I'd say we have a better sense of our risk, but it's not like I can just go to an expert and say, well, I'm this old and I weigh this much and I'm this healthy and I eat these things, and what's my risk of vaccines and what's my risk of COVID? Nobody knows the answer to that. Nobody. There's nobody charting it. There's nobody looking at it. No one knows. We can do our best, but we're not good at it, right? We're not good at it. We end up going to Joe Rogan and all these people, right? That's not a good situation. I don't want to be relying on Joe Rogan for my healthcare, but I kind of am, that's not good. So expertise, right, as a negotiating lever for the state after Bitcoin, non-existent. And COVID. Coercion. So in Quebec right now, this is a great story in the news. If you go to Walmart, right, they've extended the vaccine passport to such an extent, but if you go to Walmart, they've created like a cubicle for you, because you're still allowed. They can't stop you from going to the pharmacy and the grocery store, but they can stop you from going to the toy store in Walmart. So they built like a glass cage, and someone will walk around with you if you're unvaccinated, and only allow you to go to the pharmacy and the grocery store section. They won't let you go anywhere else. It's just like a coercion thing. Now, we've seen they've also got this plan. They're going to go door to door and try and convince people to get vaccines as well, so they get everyone vaccinated. While this is all going on, of course, you've got another story in Canada, which is this trucking convoy. And the truckers are driving across the country, clogging the highway, saying, we're not doing this vaccine thing across the United States-Canada border. We've got supply chain troubles. This is very, very dangerous. This is not going to work. And there's a huge protest. So one could imagine that there's the coercion power is almost at an end. It sort of makes sense in a pandemic that the government is going to take a bit of power and try to be coercive, because they're trying to eliminate as many risks for as many people as possible. But at a certain point, the patience will run out. And I'm still of the belief that the power is certainly with the people, will only go so far as to follow them, so far in following them, and at a certain point will stop. And the trucker convoy, I think, is a great example. So coercion, while still there, you can see it dissipating. And if they don't have the information, if everyone is holding their own, and this information one is where holding your own keys, I want to mention, is really important. It doesn't really get stripped away unless you're doing that, right? That's why you'll hear a lot of Bitcoiners putting such a importance on this. It's not just posturing. Literally don't get this major advantage. You don't take the negotiating power unless you unless you perform that extra step. I think I could be wrong a little bit, but it's a really important one. And it especially takes away the coercion, because then they can't take away your money. They can't, really punish you as much. Rewards are still there. They get to keep rewards after Bitcoin. That's still a big part of what they do, and probably should. They should probably always be able to reward people for good behavior in their eyes, or at least the behavior they want to incentivize. So we'll come back to that in a second. The next one here, legitimate, I think is really important, really important. So in the United States, so one thing that Bitcoin definitely taught us is the idea of database integrity or security, and the security of the state of a database. But that's the whole point, right? There isn't one point of failure with Bitcoin. You can verify the ledger, you understand who has what money as far as the addresses go. You can understand all that stuff. Really important, right? And that's why we're so obsessed with hash power, because that's literally how many versions of this, or node count and hash power, how many versions of this is out there, how much redundancy is built in that helps support that network. Now, when I look at the US elections, right now, I have no proof, and I'm not claiming the 2020 election at all was cheating, unfair, or whatever. All I know is that I can't verify the election. I can't go and say for sure this amount of people voted for this candidate, this person had their vote counted for this candidate. There is no way to audit the database at all, right? And if anyone knows anything about computers, databases, computer science, network architecture, they know that if you can't audit a system, it's not happening. It's not real, right? It's not happening. So while people might say that it was the fairest election ever or anything like that, right, that could all be true. It doesn't mean it's good, right? We can't verify it. We can't know. So going forward, we'll have to see auditable elections from the software level, right? Are we going to see that? I don't think so. I don't think we're going to see that. I think we're going to have a similar opaque system as we had in 2020 and 2016 and 2012 and 2008, 2004, go on and on and on, right? I think we're going to get the same old, we're going to get it right this time system, right? And how much longer will people who understand network architecture and computer science because of Bitcoin really think that elections that are not auditable at the software level are legitimate? I don't think it's possible, right? We can say there's no deliberate cheating. We can say it's not a plot to steal an election, right? We can say that and be right, but still not have confidence in the elections, right? You don't have to catch someone planning to cheat to not trust the results. You don't trust the results just because of the way it's built, right? And you might not have had that feeling or understanding until you really understood what Bitcoin was, how it worked, and then you can apply that frame to almost any computer system that requires auditability for legitimacy, right? If we can't audit an election, I mean, think about the power that goes into that role and wonder if you can't audit it. I don't have to prove anything about it. If you know the opportunity to cheat at something is there and you can't get caught, guess what's going to happen? 100% of the time. It's human nature. So I don't need to prove it or even see it. I know that if a system isn't auditable, it's not secure, and that I can't detect how it's changed or who's manipulated it or who's done anything wrong to it. So that's really important when it comes to the legitimacy of state actors. So what ends up happening here with this negotiating power is that just like Spotify, all of a sudden we look in this situation and they're the only loser. See you later, Neil Young. We're going to see Joe Rogan on the podcast. That's going to be great. And the only real loser is Spotify. When I look at the shift in power because of Bitcoin, because of COVID, the negotiating power of the state is at an all-time low. Already, today, at an all-time low. I don't think it's going to get any better. In the end, they're left with this one thing, reward. And now when you see this concept of Bitcoin nomadism and the desire for certain states to attract Bitcoiners, you're starting to see that game theory play out. That I think Fidelity, one of the largest investment firms in the world, the other day say that if a country acquires Bitcoin, for example, it's a huge game theoretical advantage for that country when it comes to macroeconomic change and all these kinds of things. You're going to see more and more the desire to attract these Bitcoiners to jurisdictions for all kinds of reasons. And that really puts the state in a totally different position. They've got to start treating their citizens as customers. They have to start accounting for the services they provide and what they're actually paying for, because they can't just capture these people because they were born there and then throw a bunch of expertise. This is what you're getting, all these doctors and and then, coercively force them to do things they might want to do. The trade-offs are becoming a little too much. And my prediction is when we look at that psychological engine, right, the ability of the state with the loss of this negotiating power to perpetuate itself in its current form is basically gone, right? Basically gone. And all they can really do is be nice and hope we come and move there. We're not quite there yet, right? We're not quite there yet. But how far is this really, right? How far are we there? I think what happened with Neil Young shows us that the psychology of these actors to sort of manifest the futures they want is at an all-time low. And Bitcoin has allowed us to gain this freedom. So if I'm to impart a lesson about breaking up today, it's that, look for the best deal from a country. Don't look, it's the opposite of what that old JFK saying is, right? Look what they can do for you, right? Who cares? I gotta do more for them. We've done enough, right? So that's the episode for today, everyone.
Great. Love it. Nolan, thank you very much. Are you back with us tomorrow? Do we have an episode tomorrow?
Oh, yeah. I'm going to pre-record one tomorrow. Pardon me. There's some nomadism going on tomorrow. So
Okay.
So I will send you a file early in the morning. So pardon audience, there won't be a live show tomorrow. We like to do it live. We love your comments. So please, share feedback. We love it. More feedback, the better. The more we can sort of tweak the show to help you guys. Right. This is like a relationship show, right? So this is to help folks get over maybe some hangups they have about, breaking up with their country. Everyone did the Pledge of Allegiance and stuff. Some of this stuff's pretty hard, right? So we're looking for the right, soft landing from the breakup.
Yes, absolutely. And yeah, we're looking forward to that. Thanks a lot for coming on today again. And that's it for our show today, guys. Thanks so much for joining for the debate. I would urge you again, please like and subscribe so you can catch more of the breakup tomorrow throughout the week. We've got more debates coming. We've got more special guests, some powerhouse Bitcoiners, some powerhouse, I guess the best of the shitcoiners to come and try to, make their case against them. Pretty exciting stuff. So please don't forget to like and subscribe, and also get your tickets to Bitcoin 2022 today, because the amount of time we can have this discount out there, 21% discount with promo code YTMAG, is limited. So we're going to give away a couple more sats here. We're going to drop some Bitcoin on screen and in the comments. Those are first come, first serve codes, by the way, guys. So if you're not the first one to enter the code into the Carrot app, then you probably didn't win, and better luck next time. Outside of that, yeah, go get your conference tickets. We've all got ours, and I'm excited to see all of you there. We've got we're planning some pretty interesting ways to stream from the conference, and maybe we can incorporate some of you guys, get your takes, get you on video as well, and hang out with you. I think it's going to be a great time. So 21% off with the promo code YTMAG. And that's the biggest discount you're going to find on your conference tickets. It's also very limited, so please get them tonight if possible. Outside of that, I think we're good. We got a full show for you guys tomorrow, so we'll see you at 1 p.m. Eastern. Again, don't forget to like and subscribe, turn your notifications on if you like, and we'll catch you tomorrow.